And I can't believe everybody is saying that I'm late. How can I be late? It is 9:30, not late. Intro ran at 9:30. This isn't, Tanner's channel. We're not late. We're absolutely not late. Thank you, everybody, for being here. Some of the gang is running late. Some have other things to do tonight. I am here with all of you. Put together a bunch of slides. So we're going to get into it pretty soon. Hope everybody has their milk and cookies. I got my glass of whole milk ready to go. Hopefully everybody had a good week. It was pretty interesting in the market and a lot of stuff happened. So some of the things I want to go over, a lot of people have been asking me about Meta. I'm going to be talking a lot about Meta tonight. I'm going to break down some of the things from the Tesla shareholder meeting. I'm going to go into why I think the bears are wrong about AI for a little bit. Probably get to discussing crypto legislation. We got some tweets or we got some posts or whatever you want to call them these days pertaining to President Trump indicating he's going to sign the crypto legislation, the new market structure bill. So I think that that's going to be pretty bullish. So let's get into it. Yes, thank you, everybody. You guys are the best. Couldn't have done it without you, the 10K. So really happy that we got there. It's because of all of you, and I'm really having a blast hanging out with everybody and just going over the raw thoughts. I'm going to send a text out right now, and then whenever people show up, we will transition the conversation. All right. Let's bring that slide deck back up. Please, in all seriousness, keep in mind, I just do a ridiculous amount of research. So I don't know your situations. I'm not a tax accountant. Please use this as educational only and entertainment purposes only. All right. Meta. Everybody saw Meta. It's down about $140 to $160 a share past couple of weeks. I certainly noticed Meta's a fairly big position in the portfolio. I think it's one of the best companies in the market. And one of the reasons why, I'm going to get rid of the banner. I know a bunch of people don't like it running on the bottom, but just to make sure everybody is aware of the situation, I am going to let it run for a minute or two in the beginning in addition to that initial slide on this. So when Meta reported their earnings, they missed by about $5.22, if I remember correctly. Immediately, it started selling off. Algos got a hold of it. Stop losses were probably triggered, even though I cannot prove that. The thing that annoys me is that you get into a situation where the stock is down so much in a matter of 30 seconds without anybody looking at the press release or anybody looking at anything that's going on with the company. That's the whole point of an earnings call, to go through the deck, to listen to the earnings call, go through the press release, and get information. If it's not about information or fact-finding mission, why do they even do earnings calls every quarter? It's just crazy to me that the headline number comes out and they get smacked. Oh, we have our first guest, one of the favorites, who we are going to talk into a few things. Senor Patel. You are muted or your mic is on the wrong one. So while we wait for Chris, I'm just going to go through this slide. So one of the things that you'll notice is there's a ton of growth. Chris, you good? Can't hear you. Chris may be on a phone call. All right. So Chris, if you can hear me, I cannot hear you.
There you go. You should be able to hear me.
There you go. All right. You have a good week?
Yeah, man. Right now I am watching the Wake Forest Virginia game. So, God damn it, Virginia, you better win. You're a ranked team. Losing to Wake Forest, bro. The hell? It's an 8-1 team.
I don't
Do
even
you,
know what to say anymore.
do you watch college football? No?
College basketball.
All right. Now I'm a college football guy, so if uh if um if Virginia wins, I'll do a giveaway today. All right.
All right.
So I'll do like $100. I think $100 would be good for someone. So before we get started, I'm gonna do $100 raffle for like I guess the viewers if Virginia wins. If Virginia
Everybody
loses,
better
then
hope Virginia wins.
yeah.
Well, that's very nice of you.
The Cavaliers. It's the Cavaliers, not the Hokies.
Very nice of you. I like it. I like it.
Yeah.
So are you liking the prediction markets instead of traditional betting apps?
I am. I am. Give me 1 second. I gotta.
Yeah.
Huh. I don't know why my Bluetooth is not connected to my computer. Give me 1 second.
All right. Well, if you're not a fan of Virginia, you're a fan now. That's all I can say. Because if Virginia wins, Senor Patel is going to be doing a giveaway.
Yeah.
You good?
Yes, sir.
All right. So, for those of you in the Milk Gang, the deck I have pre-made, I already put the link up so you can download and go through it on your own in case I don't get to everything. So, Chris, there's really three things I want to discuss, and we can discuss anything you want. I want to go through Meta, the Tesla shareholder earning, and crypto legislation. Is there anything else you want? Is there anything you want to discuss tonight? I know you would put a few things in the text thread. So
I'm trying to think. I think when is the shutdown going to end? Because I think we're getting close. I think
let's start with that. Let's start with that.
Yeah, I think we're getting pretty close to the shutdown actually ending finally. All the politics aside, there's actually economic damage that's starting to kind of show up. Like flight cancellations are happening all over the place. This is not good. This is not good. Economically, the cost of keeping the country shut down for this long probably cost more than what the Democrats were demanding for the ACA subsidies. Now, the thing is, the ACA subsidies would have benefited a lot of the Republicans that are in the states that have membership that's grown significantly from the ACA subsidy extent, like what do they call the enhanced subsidy extensions that the Biden administration had. So if you look at the data on which states actually recorded the highest number of new ACA members, it was like Georgia, Louisiana. Let me pull it up actually. So a lot of the folks over in Georgia and around that area, around the South, those Republicans are like, listen, our constituents are going to be hurt by not extending these subsidies. So they kind of want to be in favor of this. But at the same time, the harder, more entrenched Republicans, they're like, we're not going to do it, not because we don't want to. It's because they don't want to give the Democrats a win. And so the Democrats are using this as like a midterm, like, what is it called? Political move saying, look, Republicans don't care about you. They want to get rid of your SNAP benefits and they want to get rid of your ACA subsidies. And the sad reality is right now we're at a point where it's open enrollment and the open enrollment prices are just insane for people. So I don't know, like, I think eventually the ACA subsidies will get extended at least for another year, but we'll see what happens. You know, any deal that comes is going to be very positive for Oscar. So if you look at what happened on Oscar on Friday, like because of quote unquote a possible deal, ACA was already starting to kind of move up, you know?
So I'm not following Oscar the way that I was. As far as the shutdown goes, look, it needs to end sooner than later. We need to make sure that we have a thriving economy. People should not be working for no pay. And
Hmm.
it's really horrible what's going on. I just want both parties to work together and get a good deal done for the American people. From an investment standpoint, the last thing that I want is to roll into December without a deal, because then you get to the point where Fed Chair Powell may end up convincing people and saying that there's not enough data. We don't have any data for a couple of months, and they have to postpone a rate cut. He was already hawkish on the last Fed meeting. And the last thing that I want to see is the Fed chasing their tail in 2026, trying to catch up, because that could throw a monkey wrench in a year end rally. So they need to get a deal done for so many reasons. This is just getting ridiculous.
Yeah, I mean, it's like I said. Here's the question, and maybe we can make this an interactive thing. Have you done a poll on
Yeah, I can
this
run
yet?
a
Okay,
poll.
so run a poll. Who do you guys blame for the current
No,
government shutdown?
let's not get into politics like that.
It's not about politics. No, no, no. It's not about politics. This is about, we have a chat, right? We just want to know what people feel like, because I think a lot of times the more people that you get together and you get like an idea, you can see what kind of impact it's going to be. So here's an example. If you see that a lot of people are blaming Republicans, right? That means the Democrats are just chilling. They're like, okay, this is great. If there's a lot of people that are blaming Democrats, then Republicans have no reason to open the government, right?
Yeah,
So right now,
I don't want to go down the political thing on this. I just don't want to do it.
it's economics, man. Regardless of how we feel politically about supporting the Democrats or the Republicans, we're going to be impacted by the decisions that these guys make, right? And so as investors, I take my politics hat off. Even if I'm a Republican and I think Democrat ideas are stupid, or a Democrat think Republicans ideas are stupid, I'm going to be very objective about how this actually impacts the economy and where I want to position myself to best benefit, regardless of whichever party gets in charge. If you're thinking like, I'm going to be an investor only when there's a Republican president and there's a, then you're going to lose. And it's the same thing with, I'm
Oh,
only going to invest
100%.
what, you got to learn to invest through the political cycles. Now, the thing is, every time a political party is in, you will have industries that have certain uplifts, and other sectors of the economy that are not going to have an uplift, right? So like I said, if we don't talk about politics, we're doing a disservice to investors in general. So, like I said, regardless of whatever your personal party politics are, you have to at least talk about them, so that this way you can make a good case macro wise for the companies that you're involved in. As an example, I became extra long on Google, Microsoft, Amazon, and all of these guys when Trump got elected, and he started inviting all the CEOs to the White House. Why did I not give up on Google going to win their antitrust thing? Because the minute I saw Sundar having private dinners, by the way, I don't know if you know, I think it was Eric Schmidt had dinner at Mar-a-Lago with Trump like 2-3 months back. And then what happens? The antitrust thing, they barely move on it. I don't know. So regardless of how you want to frame it from your own personal politics, watch what's actually happening. And right now, the government and economic policy is being driven by one political party. And if that political party has some insights into what they're planning on doing, you should follow that and invest accordingly.
So I'm
I mean,
going to
that's
bring
only
up a chart
logical.
right now
Yeah. Yeah.
that goes exactly to what you're saying. So I'm going to do it through the window. And you're 100% correct. So I'm going to take everybody off real quick and then add them on. It doesn't matter who's in power, the market traditionally goes up. So if we start with Clinton, market did phenomenal. GW, Junior, not so great. Obama did great. Trump 2016 did really good. Biden did really good. Trump 2024 is off to an okay start. And the reason Clinton and Obama have longer is because they both served 2 consecutive terms. So,
Yeah.
regardless if it's a Democrat or a Republican, over time, the market tends to go up.
Now there is something that I don't know if you've ever correlated. Usually the market does the best when believe it or not, this is going to sound really weird, but
Oh, it's when you have
when
a
one
divided government.
right,
Yeah, because
exactly. And
less
you've
stuff
noticed
gets
that.
done.
Exactly. Less
It's more
impediments.
predictable.
Yes, less impediments
The market likes
to
certainty. That's all there is to it.
yes. Yep. Yep.
So, look, my biggest thing right now is that we're getting to a very dangerous point where if Americans aren't getting paid, you really could see a crack in credit and unemployment go through the roof. And that is not what anybody wants to see. So, this just needs to get solved regardless.
Yeah, I mean, from what I'm seeing outside of the whole political thing, I think the Trump administration saw this election as a wake-up call to basically make sure that the main topic that everyone is fixated on right now is the cost of goods and services, right? Inflation. If the Trump administration is somehow able to carry the message and saying we are going to focus on inflation and bring inflation down, I think he has a shot of retaining the midterms. And the thing is, it's very, very difficult for the incumbent party to retain the midterms. So the problem is if the Democrats do take the House and the Senate during the midterms this year, Trump is going to be a lame duck. Every day he's going to be tweeting, and then Congress is going to be like shutting everything down, like no, no, and no, right? So this is where we have to kind of ask ourselves, like, okay, how is the Trump administration going to enact policies with the time that they have left? So they've got about a year and some change left. What are they going to do? In my opinion, he is going to do everything possible to get inflation down because that is what's politically the right move on his part. What do you think?
I mean, I want to see lower oil prices. I would like to see oil 55 to 60 and stay there. I don't want it under 55 because that will help with inflation. That will also help with expanding margins because you'll have true manufacturing, I guess, business environment where all your input costs are significantly lower than they were. And you're going to need 6 to 8 months for that to really trickle through and catch up. We really just need oil between 55 and 60 for a while. And regardless of prices there, Chevron and Exxon are going to win. And the
Well,
pipelines are going to win.
here's the thing: the break evens at 55 would be terrible for most of oil and natural gas. So I don't know if that's necessarily where we end up. 75 is where like most oil is decently profitable outside of the super majors. So I would say 60 is fine. My bigger concern is, believe it or not, food inflation, because that's something that's so in your face. You know, when you see, like, when you go to the store, right? Right now, you go to the gas station, it's like $2 and something. So even if it goes down by 20 cents, it's not going to impact you very much. Unless you see a one handle on per gallon, it's not even remotely going to impact you. On the other hand, you go to the grocery store, and right now, my wife asked me to go buy uh, a carton of milk and popcorn, right? So I got a bag of Skinny Pop and I got a popcorn. Guess how much I paid for that?
How much?
$11.
I'm not surprised.
Can you believe that shit?
I'm not surprised.
For a carton of milk and popcorn, it was $11.
Yeah, I'm not
Which
surprised. The
which
corn milk was probably 5.75 or so.
five something, yeah.
Yeah.
And the bag of popcorn was a larger bag of popcorn, but it was like $5. So I'm pretty sure I remember 2-3 years ago, this would have been like $6, maybe $7. So right there, it's in your face. And so if you can somehow get those prices to be somewhat lower, I think the Trump administration is going to have a good talking point for the rest of the year and saying, this is why you should vote for Republicans during the next, midterms. Otherwise, You know.
Well, you need more. We need more competition, and we need input prices to go down. I just don't know how you get more competition in the food industry.
Well, one of the ways is by limiting the amount of what is it called? Well, yeah, I think that's one of the more difficult things to do because once you have like a marginal increase in the food industry, it's rare that you see them coming down. I don't know. This is where the Trump administration is going to have to really lean on, I guess, the manufacturers like the soda and what are they called? Like what are they called? The major brands that do all the packaging and everything else because their margins are getting fat. I don't know if their costs have gone up that dramatically. So I have to look into their margins, by the way, to see.
Yeah, it's not something that I really follow. All I remember is that there's really four main beef producers, and there's only really a couple of very large scale packaged food companies. There is not a
Yeah.
lot of competition. This isn't like technology where SaaS companies can just start up. It's a much more difficult sector to get in.
Yeah. Yeah. I wonder how much this new policy on Ozempic and Manjaro are going to have on total food consumption. The reason why I say that is because this new plan to make those drugs cheaper, I think is going to be a big game changer that we're going to see the next 5 years. It's, in my opinion, this is like the AI quote unquote moment for U.S. healthcare for obesity care. I mean, it's going to be a big deal. If people don't know, 40, I think the last time I checked, almost 40 something percent of the US population is obese, which is insane if you think about it. That's 160 million people that are obese in this country.
Well, look, it's what we eat. You look at the
Yeah.
50s and 60s and 70s, people walked everywhere
Hmm.
and they didn't have the refined sugars the way that we do today.
Yeah.
And they're like crack. I love refined sugar. I mean,
Yeah.
it's like crack.
Yeah. Like I said, this is one of those things that I think having access to those medications like broadly is going to be a really big game changer for anyone who's actually actively looking to reduce down their weight. Because I mean, the price points that the Trump administration described were affordable for most insurers to cover, and then also for a lot of coverage from the Medicaid and Medicare side. Because usually, what happens is when prices get quoted in Medicare, Medicaid, they eventually come to like the private markets, and they end up being around the same. So I would say just having access to a lot of those drugs is going to be a big thing. And there's new variants that are coming out that are going to be even easier, where all you have to do is just take a medication like orally. And if people are able to lose the weight that way, it's great.
I really think genomics is going to be big. I just don't know enough about it.
I'm not a big fan of genomics. There's so much there's so much unknowns in the space that it's really hard to quantify. And then yeah, I'm just not a big fan of genomics.
So where do you want to go from here? You want to talk Tesla? You want to talk crypto, BMNR?
I
Where do
think
we
we
want
should start off. I think we should start off with Tesla and just dispel some rumors and myths. A lot of people are coming online saying, "Oh my God, Elon is getting $1 trillion. Oh no!" And I'm
so
like, "Do you know the shit that he has to pull off to get y'all to a
yeah,
trillion
so
dollars?"
I got it all laid out for everybody.
Okay.
So the shareholder meeting just happened. 75% plus voting in favor of the performance award to Elon. He is not getting $1 trillion right off the jump. It's in 12 tranches. I got a whole slide on it. They also approved to amend and reinstate the 2019 equity incentive plan, and the elimination of supermajority voting requirements was not approved. Now, the investment in XAI, which was proposal 7, the advisory vote received more votes in favor than against, but there's a significant number of abstentions. The board will examine next steps in light of shareholder support. So Elon went into a whole bunch of stuff, but before we get there, this is the full breakdown of what it is. he has 12 tranches that he has to get to. And the first one is hitting 2 trillion market cap. The very last one is 8.5 trillion and everything in between. He also has additional operational milestones to hit 400 billion in operating profit, 20 million Tesla vehicles delivered, 10 million self-driving subscribers, 1 million robotaxis, and 1 million robots. He is nowhere close to anything. So for those that are online saying that he's getting $1 trillion, it should be he may get $1 trillion, but there's a lot of things that have to fall in place and go right for him to achieve that.
It's too much, man. I'm not saying too much. Like, it's the amount of things this guy has to do to get that money it's insane. So from a shareholder value perspective, I think it's great. You know,
Listen, the shareholders approved it. They're the ones that own the company. It's a publicly traded company. And if he gets the market cap to 8.5 trillion, and the market cap was 1.47 trillion when the shareholder meeting happened, I mean, that's a huge return. That's a 5 to 6x return. So
and he's doing that while Tesla is actually going down in growth in what is it called?
man, did you have my computer hacked? Did you see what I put together? Jesus.
No. I think logically like you do. You know, it's not complicated.
Here's where we're at with that. So this is why I fight so hard about Tesla. The valuation doesn't make sense. At one point, I turned bullish because it started to make, bless you, some sense. But the reality is that their revenue is not growing. It's actually declining. And I have the numbers on this slide. So revenue has decreased since 2023 by just over 1%. Gross profit is down 8%. Operating income is down 46%. Free cash flow has increased by 2.48 billion or 57%. But keep in mind, their free cash flow is still like 6.8 billion or something like that. And net income is down 66% in the past 2 years. This is not a company that's thriving with growth. And the metrics that he has to hit are very difficult. Now, Chris, did you go through the entire shareholder meeting or not?
No, I didn't even watch.
So I actually went through it. That's not that important. So some of this stuff about Optimus, and I think you know that the only thing that I think is going to work to get it there is Optimus. So he's envisioning tens of billions of Optimus robots, or as Chris Patel would say, Terminators. And he can't believe that I will have one staring at me. But it's also, he is saying, now we all know that he likes to, we're not going to use the word embellish, but he likes to talk very extravagantly with his ideas, and rightfully so. He pulled off something nobody else could. He went against Ford and GM when nobody thought it was possible, especially with an electric car and won. So he's expecting that Optimus will be capable of eliminating poverty and providing medical care, et cetera, et cetera. We'll see what happens on that. Now, Tesla is planning the fastest production ramp of any large, complex manufactured product ever. And they're looking to get to a 1 million unit production ramp in the Fremont location. Once production exceeds 1 million units per year, they believe the cost is going to be around $20,000, which is pretty crazy. Now, we're going to get Optimus version 3 next year. And it looks like, from what Elon is saying, you're going to get a new version every year that will have substantial improvements. So I came up with my own little thing, make it a little bigger. So top left is 1 million units, top right's 10 million, bottom left 100 million, bottom right 1 billion. So here's where I'm at with Optimus. At a 20,000 price point, if they have a 10% operating margin, that would be 20 billion in revenue for every million robots and 2 billion in operating profit. Now, I believe that they're going to have a monthly learning fee. where the Optimus bot is hooked up to a neural network and it learns from every other Optimus bot that performs a task. One bot folds laundry, it uploads into the cloud, everything downloads real time, they all get infinitely smarter. Hypothetically, if they put a $40 a month package on that, on a million bots, it would generate 40 million in monthly revenue, 480 million annualized. You get to 10 million robots, significantly increases. Same theory, 20 billion operating profit, 4.8 billion in annual revenue from the learning platform. Now, here's where it gets real interesting. They get to 100 million under this methodology of just a 10% margin. That's 200 billion in operating profit with $48 billion in reoccurring revenue. And the question becomes, what would the margin on that reoccurring revenue be? This is why Optimus, to me, is the crown jewel of this company. Because if he actually gets to billions, just 1 billion, at $40 a month, he could generate $480 billion in annual revenue just from a $40 plan per robot.
It's pretty insane.
It's pretty insane. It's actually making me want to get bullish, but I can't get around the valuation right now. Like, I want to get so bullish on Tesla, I just can't.
I think the time to be bullish on Tesla is if there is a meaningful pullback on any sort of bad quarter or two, then yeah, then it's something that I think whenever I look at certain companies, I do look at incentive structures. So whenever the incentive structure is geared towards share price appreciation, that's usually a good thing because it means that there's a lot more shareholder alignment to performance. Like one of the things that I'm very bullish on right now, and you're bullish on it too, which is Verizon. But one of the reasons why, and I think a lot of people kind of miss this, is Dan Schulman, a lot of his performance bonus comes at Verizon being above $55 a share, right? So his contract is a 3-year contract. So in the next 3 years, he has to get Verizon stock to 55 and above. So how does he do that? And so the thing is, there's financial engineering that can be done here and there. There's actual growth that could be done. So whenever you look at companies, right, go to the executive comp. And the way that you do that is go to the annual shareholders annual report, and you could look up like what is the incentives for the executives to get paid. A lot of these executives, they have executive comp that's incentivized towards share price appreciation. So, when you see that, it's a good sign, and then also when insiders are buying shares, that's a good sign too.
Yeah. So there's a bunch of comments asking a lot of things. So I do believe a lot of people are going to buy bots, and I would challenge everybody who is skeptical to think about it like this. Mm-hmm. At a 20 to 24,000 price point, it is the price of a low-end vehicle. If you finance it over 5 years, it's basically a car payment without the insurance payment. Now, when you think about what it can replace in your life, think about this for just the most basic applicable tasks. You have a bot in your house. It can do your laundry. It can fold your laundry. It can clean. It can cut the grass and do all the chores that take up time out of your life. You're basically with a robot buying back time. We already have, through Intuitive Surgical, the Da Vinci machine, where for prostate cancer and everything else. So there's a lot of laparoscopic surgeries where surgeons control it from the outside. Now, you have to think at some point, whether it's a decade or 2 decades from now, we are going to have robotic surgeons. Eventually, that's going to be the end goal of this. But before we get there, to think that we're not going to have an army of robots doing landscaping or doing any of those tasks is crazy. It'll probably be here in 5 to 10 years. So if I can get a bot for my parents that's going to take care of the things that I don't want them doing, such as trying to pick up a case of water, to me, it's worth it just from buying back your time. So I think it's going to make life significantly easier in the aspect of when you get home from work, you don't have to worry about that stuff. It's already done for you.
Mm-hmm. So you think that the world everywhere you're gonna see like bots doing things like, let's say you go to the grocery store
Yes.
and you're gonna see like bots putting things on shelves. You go
Yes.
home, you're gonna see bots cutting the grass.
Yes.
Uh, you know, I don't know. That sounds a little too dystopian for me, brother.
Think about
Like,
this. If I was to go back and show you videos from JD.com, you're familiar with
mhm.
JD, right?
Yeah,
Chinese company.
yeah.
Back pre-pandemic, they basically had fully automated warehouses.
Mhm.
Now, that was back in 2018, 2019 when I was following them. I've seen the video. I think you saw the video of Amazon with their warehouse looks like now. And to
Mhm.
think that these companies are starting to put a lot of money to humanoid robotics and they're making sure that that's the next big thing. I think it would be
Yeah.
crazy to think that we don't have bots doing those things. Because think about it.
Yeah.
Look, from a business standpoint, this is going to sound so horrible, but a robot's not going to injure itself where you have to pay a workman's comp claim.
Hmm. That's true.
Companies are really going to go that route. Like to think that you're going to have, and this is where I get worried about it because I don't know where a lot of the jobs are going to be. And that's why I thought what Andrew Yang was saying was so interesting back in 2016 about thinking about how work is going to be in the future. Because if you have bots doing these jobs, what are high school students going to do for their first job? Or what are people going to do that are just starting out if robots are packing shelves at a grocery store?
Mm, I don't know, man. That's a
And I'm not
very, like I
saying
said, it's
tomorrow, but in 5 or 10 years, I can completely see it happening.
I mean, I'm I'm trying to think of like all the use cases where someone said in the chat, it's a think of all the dangerous jobs that humans do right now that robots could replace. And I'm thinking like, okay, what are some of the dangerous jobs
Coal
that
miners,
yeah, robots could actually do better job mining coal. I could agree with that.
don't have to worry about black lung or anything like that.
True, true.
I mean, there are
Fire, I would think fire people, right? Like, I mean, but then I'd say like some real firemen have to be there, but at the same time,
that you could send
having
the
like a
bots into
firefighting
the
robots.
fire. Like, there's a lot of things when you really think about it. And I'm not saying that it's good, bad, or I'm indifferent. I'm just saying
Yeah,
that this is the direction it looks like it's going.
yeah. The one use case of like a drone that I saw over the weekend, which I thought was amazing, was there was like this mini drone that self charges that goes after mosquitoes and actually targets mosquitoes
I've
and
seen
actually
that.
just got to. That's freaking cool, dude. If
Yeah.
it detects it using like all sorts of sensors and just goes right to the mosquito and like cuts it up through the blade. And I'm like, dude, that would be so cool to have in like my brother-in-law's backyard because he's got a really nice backyard with a lot of trees and stuff, but he's got a lot of mosquitoes back there. And we're literally like the kids are always getting bit. And I'm like, there's a bunch of candles that you could put up, the salmonella candles, but they don't
They
work
don't
that
work.
good.
Dude, I get lit up by mosquitoes. They love my blood. I don't know why.
Yeah, no, it's pretty bad. So I'm thinking like, wow, it would be so freaking nice if this drone could just go and kill all of these mosquitoes, man. You know?
But also think about elderly care. A bot with
All
a
right.
I'm
This
just
Virginia
saying.
game sucks, bro. That's it. Virginia lost, man.
Oh,
How
dude,
the
that ain't
hell
no
did
good.
they freaking got a fumble, man? They were right at the this is bullshit, bro. 43-yard run. They had a 43-yard run, okay? They got to the UVA at 25, and then they freaking fumbled. Jesus Christ.
Do
And
you have
then
any other games on tap right now? Or just that one?
no. I won my game with Vanderbilt, but I'm gonna lose this one. Now Wake Forest is gonna win. That's sad. Wake Forest beat Virginia, and Virginia is the top of the ACC right now. Ugh, what is going on, man? So many turnovers.
So I want to get your opinion on this. Look at Meta versus Tesla. They're roughly the same market cap. Meta is a 1.57 trillion. Tesla right now is 1.35 trillion. And the profitability is night and day. To me, This is why Tesla needs Optimus so badly, because I'm not buying into the robotaxi thing, and we'll talk about that in a sec. But right now, when you look at Tesla being a $1.35 trillion company, doing 11 billion in EBITDA and 16 billion in cash from operations, and almost 7 billion in free cash flow, I mean that's crazy. It trades at 125 times EBITDA. It trades at 85 and a half times operating cash, whereas Meta is actually growing a ton and they're trading at 16 times EBITDA and 15 times operating cash. I mean, it's just, he needs these other verticals. He absolutely needs them. And I want to get your opinion on Robotaxi. Now, with the new versions of the software, this is obviously going to get full legislation at some point in time, whether it's next year, 5 years, or 10 years. It's going to happen. We're going to have fully autonomous vehicles at some point. Now, if you were to get a Tesla, are you going to actually enter it into a robotaxi platform and let it drive other people around when you're
No,
not using it?
no,
Neither am I.
because
Nobody's getting in my car.
yeah, yeah, I'm not. The thing is, number one, how is it going to impact my insurance? Right?
Yep.
I don't know. I don't know how. Like, even if people say, "Well, Tesla will cover the insurance," it's like, okay, but like, do I want to deal with the hassle of having my car go through insurance thing? And then I don't know how people are going to treat my car. I'm not to mention some people can do that successfully, where they've done things like that on Turo, where they've actually rented out to people. But I'm just not that guy. I'd rather, if it's my car, I want to maintain it. I want to do everything to it. I don't want to give it to other people. So no, I wouldn't put it in the taxi network.
I'm with you on that. So I feel the same way. I also believe that people are less likely to try to hail a robotaxi from a Tesla app than continue to use Uber. I'm just not in the camp that because Tesla comes out with a robotaxi platform, people are going to use it the way it's being made out to be. Like the way that the Tesla bulls are making this out is that this is going to displace Uber to some degree. And I actually think the opposite. I think that Uber is going to end up buying a bunch of robotaxis and just throwing them on their platform. I mean, I don't think that a lot of people are going to use it the way that the bulls think. And also, you have to hope that there's a robotaxi in your area when you're hailing. I mean, obviously, it's a law of large numbers. Right now, depending on where you are, if you're in the city, you can get an Uber ride in 2 minutes in a metropolitan area. So, and that's not me just fluffing a number. I can go outside, get an Uber in 2 minutes. So, I find it very hard that the robotaxi network is going to be very impactful to Tesla over the first couple of years.
I don't know if the robotaxi network, that thing is, in my opinion, is probably going to be, it's not going to end up going anywhere where people are going to put their own cars. But I do think Tesla has the ability to manufacture their own cars and put them on the road, right? And I think that's what's going to happen. So this is going to be one of those promises that Tesla or Elon made to try to sell cars. But if you bought a Tesla thinking that, hey, I'm going to somehow monetize my Tesla and put it on the robotaxi network, I don't know if that's going to be a reality that's going to come your way. So
now what's interesting is the chips. And I forgot the numbers. I have them somewhere in my notes, but they are now saying that they are considering paying everybody $100 to $200 a month to let your vehicle do inference training while it's not being used. And they're going to be able to have full-blown mini servers because cooling power is already taken care of, and it's going to give them such a huge network effect, which is actually pretty genius from them. And they're redesigning the chips, and they're also talking about potentially needing to build their own terafactory. So it is going to be interesting what happens with Tesla.
I mean, that's another thing. Like, How does that work? Like, so basically the server on your
I got to pull
car
up my notes. I shall pull up my notes for you, and I'll go through it. Just give me a sec. We have somebody else who wants to be a nerd with us tonight, Mr. Tevis.
What's up?
Coming at
Tevis,
a great time.
Tevis, did you sell on Friday? Is that why Bitmine was up? Is that what happened?
No, I bought on Thursday. That's why I was down on Thursday.
That's right. It was.
It's, that much I can tell you.
Yeah.
What's up, boys?
Not much. We're
Nothing,
going
man.
over Tesla. I need to pull something for Chris. Just give me a sec.
Come on, Virginia. It's at the 2-minute warning right now.
I thought you said the game was over.
No, they actually had were able to stop Wake Forest a little bit. They've got the ball now. It's fourth quarter. They're just one touchdown away.
Chris is going to do a raffle if Virginia wins. You are excluded, and I'm excluded. He's going to do a raffle for $100 for somebody in the chat.
Well, if I can't win $100, why the hell did I join this thing?
I don't know, man.
Are they winning though, Chris?
No, not right now. But I mean, anything can change. I mean, there's still. It's not like game over, but it's close. Like Wake Forest really isn't a good place to win right now, but Virginia's got it's literally like one or two plays and we'll know.
So Chris, this is the thing about the chips. The A15 chip is optimized for the Tesla AI software stack, and it's not a general purpose chip. So Tesla's able to build it at a much cheaper cost than what they would pay NVIDIA for it. And they're able to achieve comparable performance to a Blackwell chip because it's not a general purpose. And the key technical detail is that it utilizes an inner-based system, which I'm not even sure what the hell that is. Now, what they had said is they're starting to design the A16. It'll double the performance. And where is it?
Yo, Virginia really is cutting it close, man.
Here we go. So customers could potentially earn $100 to $200 a month by consenting to allow Tesla to run AI inference workloads when the car is not in use. If 100 million car fleet was utilized running a kilowatt of inference each, it would result in 100 gigawatts of distributed inference compute, complete with built-in cooling and power, which is pretty wild that they're even thinking like this.
He's not listening, Steve. He's just watching.
Virginia. I know he's just watching the game. I'm just on the Optimus bandwagon at this point.
What about it?
With Optimus?
Yeah. Is it like, are we timeline, costs, use case? What are we talking? I have zero context.
My model.
Oh, of course you have a model.
Of course I have a model, Tevis.
Why is the price point? What's the yellow cells here?
So sorry, everybody in the chat. Bear with me for one moment. So
the only variable is the production number. Everything else is static.
Yeah, the only variable is the production number. Everything else updates. So basically, he's saying that there's going to be tens of billions of bots in the future. And you listened to the call, right?
No, I didn't.
Oh, Jesus Christ. Okay. So he said that there's going to be
Shareholder call?
Yeah. So billions of bots in the future. They're ramping Fremont to be 1 million unit production line per year. And that's just to start. Now, they said that 1 million bots a year, they can get the price down to 20,000. So I'm figuring if they only have a 10% operating margin, that's what the first block will be. And then I'm saying that they're going to have a monthly learning plan, call it $40 a month, where the robots are hooked into a neural network. They learn off of each other. So every time a task is done, it gets booted up into the cloud and then downloaded real time. So at 100 million units, that would be 200 billion in operating profit. And if there's a $40 a month plan, that becomes 48 billion in annualized revenue. And if he actually gets a billion robots out there, 2 trillion in operating profit, 480 billion in annualized reoccurring revenue. So to me, Optimus is the crux of their valuation for his comp package, because his comp package, you have to hit 8.5 trillion valuation for him to get the last tranche. And this is the way it's broken out.
Okay. The only thing I call bullshit on is the actual production numbers. Like, are a billion bots really? And how many are they producing? 1 million a year? Yeah. So
Right now they're
what is that,
producing
like
like
1,000 years? Cool.
1,000.
Yeah, I'll be alive for that. Don't worry. It's like, oh, well, Tevis, they're going to 5x production every year. Okay, first of all, they create 2 million cars total. And this is after.
Yeah, but the robots are going to build more robots. That's the way that, right? Like, it's 2 that builds 4, that 4 that builds 16, and 16 that builds 32, and 32 that builds infinity, you know?
Sure. Yeah. Okay. How many years does that take?
I mean, I don't know.
You know, it's like we start with 20,000 and then we go to what, 100,000, then 500,000, and then 1 million a year, and then 2 million, 4 million, 8 million, 16 million, 32 million. It's like, dude, there goes a decade.
Tevis, are you going to buy one?
Of course, I'm going to buy 2. So they have friends.
God damn it. Wake Forest. Fuck it. Bullshit, bro. This is stupid. I can't believe Wake Forest just beat Virginia.
You're going to buy 2 so they have friends. That's one of the best response somebody's ever had to that question.
Yeah, why not? Everybody needs a friend.
You're right.
They can work in shifts.
So I am thinking I'm going to get bullish on Tesla again. I think the valuation has come down a little bit, though.
All right. To what, Steve?
I'm not sure, because I got to tell you, I believe so heavily in the Optimus platform at this point.
Bro, there is such cognitive dissonance in the shit that you say. On one hand, you're like 1 billion bots and 8 trillion market cap. And then you're like, I got to wait for this valuation to come down. Like, dude, this doesn't make sense, Steve. Make up your mind.
I know. So it shouldn't matter, but I need to see that these numbers, that he actually has a chance of hitting these damn numbers with the bots.
Yeah.
Like you're right. The production is the big thing right now. That's the headwind, because we don't know if he's ever going to hit 1 million out of Fremont. We have no idea.
Yeah.
I just don't see how he gets to 2 or 3 trillion without bots, because right now the company is priced for future growth. It has no reason to be at $1 trillion company right now with the profitability it puts up.
Yeah, I mean, like, even if you start off the Optimus production at 1 million and you double it every single year, like, you would get to 1 trillion after 10 years, right? If you go 1 to 2 to 4 to 6 to 8 to 16 to 32 to 64 to 128, 256, 512, and then you get to 1 billion. That is insanely difficult to do. Like, that's like, come on, let's back to reality, guys.
Well, I'm not saying it's going to happen. I'm saying that's
like,
what he's saying is going to happen.
No. Even as outlandish as that sounds, 1 million and it doubles every single year without a hitch, even that takes a decade. And even that is assuming we start at 1 million, like, as a baseline, right? So it's just like, dude, this is a 20-year vision, if not longer, to get to 1 billion bots, right?
So I think the real question is, each of you, do you think that he's going to hit 8.5 trillion in 10 years? Because this is a 10-year plan. So 2035.
I think it's possible. I think it's possible with Elon Musk. You never know, man. I mean, this guy, he does the impossible. And there's plenty of ways that he can eventually get them there. I mean, Tesla's got other avenues that they could probably reach out into as well. Yeah, I think it's possible. I mean, dude, if he's this confident, he hit his other metric. Remember when everyone said it was impossible? And then he hit it. So I wouldn't doubt this guy.
I absolutely do believe he hits the 8.5 trillion. I think it's the other pieces in the comp package that he's going to struggle to hit or miss. Because 8.5 trillion, it can, like, Tesla is narrative driven and it trades at a premium depending on what the narrative is. I think the other stuff is harder to fudge.
The operational metrics.
Exactly.
I agree.
Exactly.
He doesn't get to 400 billion operating profit being at 16.6 billion without a tsunami of bots. It just doesn't happen.
Yeah. Yeah, exactly. Like, and that operating profit assumes a hell of a lot of bots and a huge margin for each of those. Like the take rate of FSD on steroids times an army of robots.
Yeah, I mean, and going back and keep that number in mind with the operating profit. Okay.
What does Nvidia generate in operating profit right now?
78 billion, I think, but their Q3 earnings are not out yet. And of course, I don't have operating profit. Look at EBITDA because EBITDA is always higher than operating profit. Tesla is almost the same size as Meta, and look at the difference: 88 billion difference in EBITDA.
Yeah. And
So-
Yeah, but I mean, and Tesla and Meta is 1.2 trillion, 1.3
No,
trillion,
1.57.
1.5
Right here.
Right. So basically what Elon is saying is, like, we're going to do 4 times what Meta is currently doing on EBITDA.
Yeah.
Okay, cool. Yeah, man. Go for it.
And they're doing what, 13%? It just doesn't.
Yeah, I don't see how this vote was any loss for Tesla shareholders.
It was totally smart. Totally
No,
smart.
because if you don't do it, Elon leaves. Tesla goes to 50.
Yeah.
Yeah.
Like, do we really think that Tesla is anywhere above 50 if Elon wasn't there?
No.
Yeah, man. Like, as any Tesla shareholder, it's like, hey, man, get rich or die trying. Like, you try to do it, or you kill yourself in the process of doing it. I, as a shareholder, benefit just as I did from the 2018 package.
Yeah.
You know, Anthony Noto just got paid his $25 PSUs. I don't see anybody on Twitter complaining about dilution, even though they were complaining about dilution at $8. It's like, dude, you profited on the run up, so they can have theirs now.
Yeah. I mean, to take that company from $5 to 25, that's a 5x return for him to get paid.
Yeah.
So
Nobody's
he
complaining.
deserves
Oh, he diluted me by like 5%. Like, nobody gives it. Like, you 5x your thing, right? So same with Tesla here, right? You buy it at 1.5, you get out at 8.5. It's like, okay, well, you've made multiples off your money if he can pull it off. If he can't, who cares?
Not a bad way to look at things. Take the numbers and the guessing out of it.
Yeah. It's going to be crazy, man, because, like, I know that, like, I think this guy's going to brain fry so hard, and people are like, oh, Tevis is a Tesla bear. I'm absolutely not. I own Tesla shares. I've owned them for 5 years, 6 years now, almost. Super bullish on the company. I just think that, like, the entire mission statement of this guy, and he's getting on in years. I mean, he's in, like, what? He's approaching his 60s now, mid 50s. Like, he is so Mars focused, and you have certain Mars windows, and SpaceX is now approaching the periods of time, like in the next decade. You know, he wants to send the unmanned missions to Mars, and that's why he's also hustling on the Optimus side of things, because he wants to fill up that rocket ship with robots so that they can get started on the base there for the humans to eventually go.
To be honest, man, you know, Elon could have made $1 trillion by just taking Optimus and just building it as a separate company.
Absolutely.
And then it would have got to $1 trillion market cap. He would have sold, or 2 trillion and sold, and it would have been easier than to try to build it under Tesla.
Yes.
You're telling me that people wouldn't have given Elon Musk some seed capital, get 10%? I mean, he's got his own seed money anyway. What am I saying? He doesn't need money from anywhere.
Build it as part of XAI. You know, like, XAI is already valued at, like, what, 150 billion? And so why wouldn't you build it? Like, my point is that his mission does not necessarily align with investors' missions. Investors are like, hey, baby, give me a payday from Tesla. I want that 8.5 trillion. He doesn't give a shit about having more money. He just wants to get to the Mars window and achieve that life purpose, right? And so he's only going to have a couple of shots at that target, right? He's going to, because like the window is a period of time. It's like 3 years or whatever. And so he's going to have maybe like 5 or 6 windows. And he can't focus on that and on the Tesla thing simultaneously. I just think it's just a lot.
So someone is saying it's not the $1 trillion, it's his 25% control of Tesla. Well, the thing is, he could just build something separately and he has 100% control. He has 100% control right now of Neuralink. He has 100% control of, what is it called? The mining company. He doesn't have 100% control over SpaceX. They had to sell shares.
He has control over SpaceX because it's not public. Like the control piece is they're absolutely right what they're saying about control, but it's also self-inflicted because he chose to make the mission statement about AI and robotics under the umbrella of Tesla. If you did it under the umbrella of XAI or under the umbrella of anything else, or even start up a new company, then you wouldn't have this self-inflicted wound of trying to get the 8.5 trillion.
Yeah, I think he should have just done a new company, incorporated in Texas, start brand new, take all the engineers that worked at Tesla that are really good, hire them over at the new company, give them stock to start, and there you go, done. Reach out to some of his friends.
Investors either. The amount of people that would line up to back it would be insane.
Yeah, you would have, like I said, this would have, like, I honestly would have seen if Tesla shareholders would have rejected this would have been like, okay, I'll just go start another company and make it easier for myself,
Yeah.
Well, I ran a poll in the chat. It's been up for 3 minutes. It has 126 votes. 66% say that Tesla is going to get to 8.5 trillion 2035.
It's doable.
Yeah.
The question is, what's the market cap right now? 1.2, 1.3?
1.3, call it.
So to get to 8 trillion, what is that? That's like
6x.
6x from here in 10 years.
I mean, look, you have the blueprint for a $5 trillion company. NVIDIA has the growth, and it's doing about 80 billion in operating income. Now, there are companies that are doing more, but because of the growth, NVIDIA is getting a bid. So we already have, between Microsoft, NVIDIA, Alphabet, and Apple, the range for $3.5 to $5 trillion companies. So we know roughly what the cash from operations and the EBITDA needs to be for the market to give it that type of multiple. Tesla's going to have to be generating 200 to 250 billion in operating income in order to hit that 8.5 trillion, based on what we're seeing at these levels.
Again, like I said, I don't think many investors will value it as a multiple off of their bottom line. I think most of them will value it as the growth narrative and whatever is the next carrot that he's chasing.
I agree with you. Tesla's going to be a narrative story.
Yeah. Do you guys think that we'll ever get into hyperinflation scenario, like hyperinflation, in which case now Tesla's definitely going to get there because a Tesla is going to be worth $1 million a piece? Do you think that's even a remote possibility that the dollar just says, oh, you know what? Screw it. It gets devalued so much that inflation just skyrockets. Is that even a remote possibility?
I guess anything's a possibility, but I don't think it's probable.
Yeah.
Because if that happens in the US, that means the global economy's failed.
Yeah.
Yeah. Unfortunately, one of the realities that we all going to have to eventually face up to is we have some of the highest debt in the world right now, and there is no appetite from the government to cut back. And so there is no fiscal solution that tends to work. And if you know anything about democracies have a way of constantly placating to the worst ideas because people are always going to be impacted by heartstrings rather than reality, in which case now you're going to get the same impact that happened to like the fall of Rome, right? Where you see like this progression in Rome where their currency was like fully gold, and then they started to kind of dilute, and eventually it became kind of one of the worthless things. So that's the challenge, right? And I think we're at a point in the world where if the dollar loses its primacy, then hyperinflation is the only way you're going to get around the debt.
I mean, or if you subscribe to Elon's whole thesis, you can grow out of it, because you can cause something that's so massively deflationary that you can essentially balance it out. But if you increase your growth rate.
Well, see, that's the thing. When you look at the economy right now, there are a lot of deflationary things that I see happening, right? And we can talk about one at a time, but one of the main drivers of spending in the United States is healthcare, right? So healthcare spending is just absolutely insane. If you look at the budget for the U.S., how much of it goes towards Medicare, Medicaid, and all the VA benefits that go to veterans that are, in what is it called, post war and stuff. It's an expensive proposition. So unless they get healthcare spending under control, that's one of the main causes of our problems. So I see multiple things being related to each other. So as an example, I see the obesity rate in this country go absolutely insane over the last 20 years. At the same time, you see healthcare costs go absolutely insane. Now, here's the hard truth that people are going to have to talk about, and this is something that Steve, me, you, Tevis, we're eventually going to have to face up to. Do you think a 98-year-old woman should get a hip replacement? Because a hip replacement in the U.S. probably costs like $50,000 to $80,000, right? Should a 98-year-old woman get a hip replacement? People will say on the heartstring side, yeah, of course, why not? But the thing is, if you spend $100,000 on this person, that means you're taking away $100,000 from the other side, right? From the younger side. So if you had nothing but prosperity, then yeah, go ahead, give all the prosthetic hips you want. But at the same time, we don't have that anymore, where we do have this massive amount of debt. And the thing is, we're basically stealing from this generation, the younger generation, to take care of the older generation, which, by the way, I'm not saying we shouldn't take care of the older generation, but a lot of the benefits that have come in society have come, and a lot of them have gone to people over the age of 60 now. And so a lot of the economy right now, you look at it, the boomers are doing really good. They've paid off homes. They've got great like retirements through pensions and Social Security. I don't even know if today's 20-year-old is going to get Social Security.
Well, okay, so two things. I think one other thing that plays a part in this is that people are having fewer kids. And so you're going to have two sort of waves. Once you get through the baby boomers and you go into the next generation, it's going to be like a diminishing problem, because you're going to have a smaller number of, it's not going to be so top heavy, essentially, with that massive generation of people that you have to take care of. But at the same time, GDP is going to contract because you're going to have fewer people in, like, your economy is not expanding. And so I think, again, going back to that argument around bots, just as an example, right? The reason why it's so powerful as a concept, if they do arrive in time, which I'm highly skeptical of. But if you think about healthcare, right? From a first principles perspective, what are the actual inputs on those costs? It's like raw materials, machinery, but a large portion of it is services, right? It's people's time and people's expertise. And if you can augment that part of it, then the costs drastically come down. It becomes a proxy of the raw materials, right? Because all the application of those raw materials is nearly free. Like, what is the hourly wage of a doctor, right? It's insane. But if you think about a Optimus bot, let's say, has surgical precision in the hardware and has all the software that, like, the educational contextual background that a doctor would have, and you can have a near infinite amount of those, like, the price completely collapses.
So you're saying the future is robot doctors? That's how we're going to get around this?
I'm not saying, well, I'm saying, like, that's the theory.
My theory is coming true, Chris.
Well, I don't think it's going to come in time, but the point is like, you sort of break through the constraints, because fundamentally the constraints is a finite supply of people. Even if we don't touch the finite supply of actual inputs, like the raw materials that go into the machinery and the raw materials that go into the actual, like, end medicine that is produced, I think the people is one of the biggest input costs, not only in healthcare, but across the board. A lot of industries are service industries when you break them down to the core components.
Well, so Chris, let me ask you this. You're a Star Wars fan.
Mm-hmm.
Empire Strike Back, end scene or second to last scene when Luke is getting his new hand.
Mm-hmm.
Robotic Doc. You don't think in
Yeah.
20 years we can have that?
Dude, they already have that. They already have precision surgical
Well,
machines.
through the Da Vinci machine with laparoscopic and all that, but that's not, a human still has to operate it.
It's possible, dude. I mean, I grew up in a generation where we still had to do the dial phone, right? Like the rotary phone. And now it's literally just da 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 da. I mean, it's possible, you know. I tend to look at movies whenever I see certain movies and they have like these futuristic outcomes. It's so weird that we end up seeing so much of that happen. And so I'm hoping that we don't get like a Blade Runner 2049 scenario. Have you guys ever seen Blade Runner?
Yes.
Yeah.
Right? So if we end up getting Blade Runner, I think that's the future we're heading towards. Believe it or not. It's pretty dystopian because remember what happens in Blade Runner? The economy is all collapsed because now they get these what are they called to them in Blade Runner? What's the name of them? But they're basically robot. They're not robots. They're genetically engineered humans, right? But let's say you replace them with robots. That's where we're headed. You know, iRobot with Will Smith, replicants. That's right, replicants.
Or how about Terminator?
That's another possibility.
It's definitely a possibility. Right now, when I brought up that U.S. budget, it is absolutely insane to me that we are spending $952 billion a year on freaking interest. It's insane.
Yeah.
We spend
It's one of
more
the
on
biggest
interest than the defense budget. It's crazy.
Yeah, it's one of the largest line items in our
It's a third
budget.
largest.
Now here's the thing: if you want to
Fourth
get that down, you got to make a lot of hard choices right now. You got to give things up. You can't say let's build 5 more nuclear carriers, right? I'm sorry, we just don't have the money to do that. We need to grow the economy, and we have to lap the debt where basically our debt to GDP is under 3%, deficit to GDP is under 3%. Right now it's pretty high. So, eventually the interest is going to eat up so much of the federal budget that the only way you're going to get around it is by what? Monetary devaluation, quote unquote, high levels of inflation. The other option, and actually this is the one that I think the Trump administration is going for, is you have such a big productivity boost in labor costs and labor that becomes deflationary. Because remember, technology is very, very deflationary, right? So this way, if you have an increase of production, at the same time, you're creating more value that you can, of course, raise in taxes and everything else. Those taxes end up going towards the federal budget, and the federal budget then ends up, working its way down, and eventually you close the deficit and you start making way to get that budget deficit as small as possible. So I don't know.
I always get confused when this topic of interest comes up, right? Because like it's split between like intragovernmental and then international, like foreign public holders. And I always like start going into this spiral around, okay, so then what would essentially, like, what are the dominoes that would happen if this interest is just not paid or defaulted on or converted into some type of harder currency, something that appreciates, that's more sustainable? Because it's like, well, okay, I understand the foreign piece, but like for the intragovernmental ones, like the Social Security or even like mutual funds and pension funds, like there must be some type of solution there.
So here's the problem that you run into. It's not necessarily that we will ever default on our debt. The U.S. will never default on our debt. Why? Because we can always print more money. Like that's the one thing the U.S. has. We can always print more money. The problem is the more money you print, the more likely it is that people will devalue the dollar relative to the other currencies that are out there. So if you are a country that imports goods and services, right, it's going to cost you more. So then what happens is the dollar's value internationally devalues. Now, one of the great things that we have here in the US versus the rest of the world is that we are very productive. We're one of the most productive countries on the planet. So everyone trusts the US dollar as long as we maintain this level of productivity, this growth and this technology and everything else. But any day that when that starts to stall out and the dollar becomes less relevant to people's economies, then we have a problem. One of the clearest indicators that the dollar is starting to lose relevance is that the Saudis right now are willing to accept money in renminbi versus US dollar. Before, if you go back, the Saudis and the Middle Eastern countries, they would only accept US dollars. Now they're willing to accept other currencies.
You mean the petrodollar is no more?
Well, I mean, it's still there because the majority of the world is still running on dollars, but it's coming down. The amount of petrodollars is going the other direction. You know.
Yeah, I keep thinking about like, okay, well, you know, for every dollar that's printed, why can't you put a portion of that into some type of other appreciating asset or harder currency? You know, as opposed to circulating it. And like, okay, so let's say you want to move to, let's say a Bitcoin standard, right? Like all these countries you're going to have a race to adopt Bitcoin, let's say, because it's a harder form of currency that's digital. Okay, well, the US can front run that and just play the game theory around it because they are the reserve currency. And when they print, they can essentially build their strategic reserve and appreciate their asset even further. Like, I don't know, I'm just thinking out loud around there must be some type of way to offset the inflation that they create. And I understand why they need to keep creating it, but there must be some way to offset it.
I mean, inflation is good as long as it's managed. Like 2% to 2.5%, you need that for economic growth, right? But once you start going into like the consistent 5s and 7s and 10s, and then what happens? It's literally a cascading effect that goes in the wrong direction. You know,
Yeah,
so
I mean it's good except for the fact that like interest on national debt is like what 19% of the total, and it's only going to get bigger and bigger every year. You know.
actually, let me look at the chart that I had, the data that I have on it.
Yeah,
Oh,
exactly.
Chris probably hit the wrong button again. He does that quite a bit, actually.
Okay. So if you look at the US's, let me just share my screen. Okay. So right now, the debt for the United States is about 38 trillion. Literally, it was 37 trillion less than a few months ago, and it's probably going to cross 40 trillion in a very short period of time. Let's see. So right now, this is the current what is it called? The rates, not rates, but the current composition of the debt itself. So one of the things that we're likely to see is more issuance of near-term bills rather than notes and bonds. Bonds are long-term, notes are like 1 year. So right now, the interest rate that we're paying on 1 year is about 4%. This is one of the reasons why the Trump administration really wants this to come down. But we need inflation to come down in order for the Fed to really keep cutting.
I mean, you need the jobs to start, you know,
you need to, yeah, and you need to also increase taxes. Unfortunately, this is the challenge that you run into. No one wants to make the hard decisions. No one wants to say we need to increase taxes and cut spending. Because if you increase taxes by at least a small amount and then at the same time cut spending by a small amount, confidence returns to the US dollar. Everyone starts buying US treasuries. The price of those treasuries comes down, right? Or actually, technically, the price of those treasuries go up, which means the yield on the treasuries goes down. And that means that now you pay less in interest cost. But once again, it's a hard decision that people have to make in Washington, and no one wants to hear, neither side. The Democrats don't want to hear that we're cutting anything, and the Republicans don't want to hear that we're increasing taxes. But unfortunately, the economy, if it gets bad enough, will make that decision for us. Like right now, assuming the average daily interest rate growth in the past 3 years continues, the U.S. will reach 39 trillion by March 30th of 2026. That's literally 4 months from now.
Yep.
And we have a deficit of 1.87 trillion a year right now.
Yeah.
Honestly, I mean, this is not a tax problem, man. It's just you got to severely cut spending.
Yeah, I agree.
It's not, you can't tax your way out of this.
Yeah. Look at this. And it's not like we're not collecting money. We're collecting money, but it's just the spending itself is just insane, man.
They're projected to collect 2.6 trillion in income taxes, 1.76 trillion in payroll taxes.
Well, what's that theory, Chris? You probably know the actual name, where it's like there's an equilibrium, and if you raise taxes too much, like you're actually going to have lower tax
collections. Yeah.
Yeah,
No,
there's a name for it. There's a whole theory around it. Basically, like your top people stop like they self-select out of the system because they have more options, and so it's like you can only increase taxes to a certain degree to maximize your actual collections. Otherwise, yeah, the Laffer curve. So you know, all roads lead to cutting spending, but just nobody wants to do it.
Yeah. Yeah, unfortunately, this is one of the sad realities of the country. Like, you really need to get confidence back in the US dollar, and you need administration, and you need a Congress that's willing to make the hard decisions rather. And yes, are people going to get hurt by it? Absolutely. I think that there's plenty of people that are going to get hurt by it. But the thing is, the question is either we take the short-term pain now, or we're going to end up getting long-term pain for the rest of the time that we're here. So I personally, if you were asking me, Chris, hey, if the government is willing to cut spending, would you be willing to pay more in taxes? Yes, because I want this country long term to be viable, to be good, you know. But
yeah, I mean, or you just cut half of the freaking departments that you have in the government right now, and just.
I mean, that's what Doge tried to do, and look at what happened. Look at the pushback.
Doge was trying to cut like a lot of the contracts and the grants, but like I'm talking about cutting entire departments, like what Argentina did, right? They cut it down to what, 6 departments, 7 departments, like the very bare bones, like defense, and like 2 others, and like no education, none of all these other ones. I saw Elon was on Joe Rogan. He was talking about this, and he was just like, Department of Education was introduced in like 1970 or something, and the education rates have gone drastically down even after it was 50 years after it was introduced versus what they were before. And so like there is no one-to-one correlation that these are actually improving the situation. And so it's like, well, you're adding a whole bunch of bureaucracy and middle management, and like you see it on a company level, right? Like the more middle management you have these companies every now and again form so much bloat that they need to do a deep cut, and it's just right sizing the ship. And you just don't see that so much on the government side because they just don't have the same stakes because they're public.
Mm-hmm. Yeah, like I think this right here, we're definitely gonna. I think eventually this is gonna get knocked out. We're gonna end up with 35% corporate taxes again. I think this is one of the ways that like you're not going to lose popular support by raising people's income taxes. But I don't know if people know this, but in 2017, as part of the TJC, Tax and Job Cuts Act, corporate tax went to 21%. Before, higher than 18 million, it was almost like 35%, or actually around 38%. And that was from 1993 all the way to 2017. So while a lot of companies, their earnings got boosted, right? In terms of like total tax collected from the corporate side may have not been the greatest. The challenge is all the spending that we've done. How much do we even collect from corporate taxes? Let's see.
I have it 524 billion.
So if you raised it to 35%, what do you think would end up collecting? What, another 400, 500 billion? Roughly?
Yeah, but keep in mind, a good portion of payroll tax is paid for by companies also.
Yeah, that's true too. I
So
mean, look,
you can't just look at a corporate tax level. You have to take into consideration, obviously, there's different thresholds, but companies do pay payroll taxes.
I mean, I'm looking at this and I'm seeing Medicaid definitely needs to get cut. Medicare needs to get cut. Social Security, you can't really do much about because that's a system that people paid into. The
Well,
question is how do you cut Medicare without cutting benefits for people? Well, the thing is you have to get the cost of Medicare and the cost of Medicaid down,
hold
right?
on.
And that's where the robots could help, believe it or not, Stephen.
On the Social Security
Yes.
point, you can drastically restructure how Social Security works.
100%.
And so like you won't end up with that massive amount of spending in Social Security if you're actually doing it right. Because at the end of the day, the money is locked up for a long period of time. And there would be some natural appreciation in that money.
Well, the
Yeah.
challenge is Social Security has been screwed over by itself because all they do is buy U.S. Treasuries, and
Right.
U.S. Treasuries have yielded barely anything for like the last 20 years. So the
Exactly.
growth in Social Security, like if they had just taken the money that they got on Social Security, and this is where George Bush tried. He was like, we should just privatize some part of Social Security to put it into like the S&P 500, and you would have got a much better return. And now you wouldn't have had this major problem of Social
Exactly.
Security being not available.
But you can still do that. Why can't you still do that today? Like, okay, pass it as a new a revamp of Social Security. Hey, like what was that thing that they did with new kids that they
Yeah,
were
so you can get a bunch of people talked about it. I used to talk about it, and then it became public. A lot of people talked about it, from Ackman to Gershner,
yeah,
the
Invest
7 or
America.
8,000 to every newborn, because there's only 3 point something million babies born in the U.S. It's an insignificant amount of money when you look at the budget, and it would be something like 30 billion a year funding it versus 1.57 trillion. And if you do $8,000 every child born, by the time they retire, they'll have something like $1.3 million or something like that. But once again, that's a 65-year fix. It's going to take a long time. I'm all for it. I think that, look, you can't get rid of Social Security because everybody paid into it. But you can make it where starting tomorrow, every child born gets, if you jump it up, 15 grand at birth going into an IRA that they can't touch their 65 for retirement.
Yeah. The question is right now, what percentage of our spending right now is going towards Medicare and Medicaid? Because that's the challenge, right? Like,
Chris, it's in the chart.
no. I'm not saying that right now. Because
16,
Medicare is 16 and 9. So that's 25%, right?
Yep.
The question is, what was it in the past? And has it been growing as a percentage
I have
of the
no
total
idea.
spending? Yeah. So that data is right here, actually. I'm trying to bring it up.
Yeah, I actually wrote I sent it to Amit one night. I wrote a entire new tax plan. I'm not going to bring it up or go through it right now. It would take way too long. Maybe I'll do a completely different episode on it.
Yeah, the problem is that, like, I don't think that the difficult thing is finding creative solutions to fixing the problem. I think the problem is that there's so many perverse incentives that form like bottlenecks and roadblocks in your way to actually implementing anything because of this democratic process and because there's so many ulterior motives across the aisle. So, like, good luck getting anything passed.
Yeah, so if you did 10,000 at birth, by the time they're 65, it's just an 8% return, 1.5 million.
Okay, so here's
more than what you're going to get out of Social Security taking the distribution over a 25-year period. Way more.
Okay, so here it is. Here's the comparison. Okay, so in 1980, we were spending 253 billion in healthcare, like nationally. Okay. And by that measure, that was $783 billion in 2023 constant dollar terms. Now we're spending 4.8 trillion, which is 4.8 trillion in constant dollar terms. Look at that inflation in healthcare costs. Yeah, man. Healthcare inflation has to
but what does
like it used to
what's included in those healthcare costs?
I guess on capita,
Because that's not just Medicaid, Medicare. Because that's less than 2 trillion.
I think it might be the total. It might be the total, like everyone spends.
But also, like,
and even
why has it ballooned so much higher than just the net? Like, if you overlaid the population growth on top of it, I would imagine it's not a pure linear, like.
I have a very simple solution for some of it. Okay. No frivolous malpractice lawsuits. If you get into some type of emergency situation and the doctor acts in good faith to save your life, frivolous lawsuits need to go.
I think that's a much smaller part of it.
It's a very small part, but it's a start.
I would say if working in healthcare, number one, people are fatter than they've ever been. If you go to the 1960s, look at the obesity rate in 1950s, 60s, 70s, all the way up to the 80s and look at it today. So number one, we are a very, very obese population. All right. So obesity is a major problem. Number two is when it comes to people are just living longer and longer. But the thing is, those therapies that usually come at the end of life, they end up being the most expensive. So if you look at the cost, I think it's about 10% of the like the patients eat about 50% of the total cost of healthcare, right? So the sickest 10% is where majority of the spending is coming from. So we have to figure out, okay, how do we become a healthier society, right? And I think that's one of the things that the Trump administration is doing that's correctly, which is the MAHA movement, which is make America healthy again, get all this processed shit out of food, make food healthier, cleaner, right? Something that, isn't going to make people gain a whole bunch of weight, that it's not a, we need to somehow get rid of all the, what is it called? All the things that make health.
Yeah.
I mean, I don't know about your experience. I mean, one of the ways the administration is doing it right now is that I'm telling you right now, I think the Ozempic and Mounjaro thing is going to be a big deal. It's going to be a game changer when it comes to bending the curve on obesity. If you look at the obesity rate in the US, after Mounjaro, I mean, I put it in my Twitter, 1 second. I put the chart here. The obesity rate in this country is finally starting to trend down, which people did not think was even possible. Right here, look at this. The obesity rate in this country was 39%. We have 330 million people in this country, and 40% of them are obese. I mean, I don't know if you guys know what obesity is. Obesity is not a little bit of extra weight. It's not a little bit of weight here and there. You're talking about like a lot of pounds on top of yourself. So this right here is a tragedy that we allowed our population to get to this level. I mean, at some point around here, we should have been like, wait a second, let's figure out what the hell is going on and get this to come down. So I think with the introduction of a lot of these GLP-1s, if this thing can come down to like 20% again, 26% even, I think healthcare costs will come down on their own because less people will have all the comorbidities that come with having obesity. Cancer rates will go down. Diabetes rates will go down. Spending on all the other things that come. Like I've worked in the hospital. I've worked in 2008 all the way to 2022 when I was fully there. Every year that we bought a new MRI machine, we had people that got bigger than the MRI machine.
Just looking at this, Chris, it's really interesting that there's clearly a narrative for GLP-1s here. What this chart tells me, and I've never seen it before, it's really interesting. The biggest acceleration that you see in the obesity rates over COVID. And so I think like some of this might also be like a macro thing where it's like, okay, now that lockdowns are over, people are starting to go back into the office. You have that movement, like you're starting to see a more normalization to the baseline incline rate. But you see from 33.4 to 39.9, all of that was, during lockdown years.
Yeah. No, that's a good point. That is a very good point. But the question is, even if you go back to, let's say, 2008 to 2018, pre-COVID, it still went up from 25% to like 34, 35%. That was pre-COVID. So,
okay. So why does this obesity rate coming down matter?
because if you think about the total cost of healthcare, if the obesity rates were to come down, all the co-issues that people tend to have, which are obesity related, people would not be in the hospital nearly as much. People wouldn't have to get all these secondary and tertiary treatments that they tend to get right now because of the obesity. If you look at someone who's in their like 50s and 60s, and if they have obesity, they're probably on all sorts of other medications that are coming around, right? It's just, I'm telling you, when it comes to the amount of money that you have to spend on a person who has obesity, it's not the obesity itself that causes the problem. It's the secondary effects of that obesity, all the challenges, and it's a proven thing. If you look at the rate of cancers over the rate of other issues that a person who has obesity gets, it's debilitating, dude.
So why don't you just make free GLP-1s and bake it into the cost of what you're paying right now from a tax dollar perspective, like from a government spending perspective?
Well, that's what the Trump administration is basically doing, right? Well, they're not making it necessarily free for everyone. What they're doing is reducing down the cost substantially to the point where insurance companies will be able to carry it. And at the same time, Medicare and Medicaid, which are the two largest health spending budgets, they'll be able to basically cover it without going bankrupt themselves. Because Eli Lilly was trying to charge $1,000 a month for a person. That's $12,000 per year per person. Same thing with what do you call it? Novo Nordisk. The U.S. patient was paying $1,000 a month for that medication. So not exactly the greatest thing. So by getting the prices down, more people will have access to it. So. Yeah, and here's the actual clip right here.
Oh, is this the one where the guy passed out, the Novo executive?
Yeah. No, I think this was a really, really good move on the Trump administration's part. And believe it or not, before everyone goes absolutely berserk, oh my God, Trump, or Biden started this, by the way. Biden was trying to get GLP-1s covered for Medicare and Medicaid patients in his administration, but he wasn't necessarily trying to focus on the pricing. Trump said, we'll get coverage, but we'll also focus on making sure that the manufacturers come down on their price so that this way the country is not like losing an arm and a leg trying to pay for these things. So, yeah.
Steve, what's next? You run the show, buddy.
You can either go to Meta, BMNR, AI. Those are the three things I had on my.
I ran a poll on my X, and I'll see if I can find it. But I ran a poll on my X, and I said, "Hey, look, like you guys have two options. Option one is you guys can buy Meta, and I forget what price it was. It was like 620 or something. Or option two is you guys can buy, yeah. So which is the better buy? I said over the next 12 months, Meta at 640 or Amazon at 250. The poll got about 700 votes. And first of all, I want you guys to answer, then I'll show you the poll.
Next 12 months, I would pick Meta right now.
Chris?
Longer time frame, Amazon.
I'll pick Meta.
Yeah, so general consensus was Meta, but like by a razor thin margin, dude.
Razor thin.
Right? Which is kind of crazy because Amazon rallied quite a bit and Meta just sort of nosedived quite a bit. But yeah, Meta is quite interesting at these prices. It's actually lower than when this poll ran.
All Zuck has to do is just say, listen, we're not going to spend as much as we're spending on AI chips, and we're going to focus on buying back shares. Watch Meta skyrocket. On the other side, Amazon doesn't necessarily have that same leverage, you know.
Yeah, it's 2022 all over again for Meta.
Yeah. Well, at 600, not really. I wouldn't say that. I mean, remember, Meta went from
same issue why it fell. I mean, it fell 75% in 2022, but it's the same issue.
The velocity of the decline was not nearly as much. I mean, you're talking about Meta at 600, which was what, like 3 months ago, which is what it was at. I mean, a Meta at like 400, that would be very interesting. I would probably sell everything I have and buy nothing but Meta stock for the next 2 years if Meta got to like 400.
So I actually started going down this rabbit hole right before Chris came on. So the whole reason Meta is down right now, and I get some people are looking into the earnings call and taking what Zuck said one way, some people are taking it another way. The conference call didn't even happen. Press release, nobody read it. The second that headline number on EPS came out, Algo's got a hold of it, sold it off, and then stop losses got triggered. The bottom line is that Meta is still growing a ton.
Yep.
So they've generated, this is a cash flow statement, $108 billion in cash from operations over the past 12 months. That's up 18% year over year. Think about the rate at which they are growing at these levels. And in Q3, their cash from operations increased quarter over quarter by 17.5%, which is $4.44 billion, compared to CapEx, which increased by $3.31 billion. So you have free cash flow increasing quicker. Now, one thing that Zuck could do that could trigger a huge upswing is just say we're done with Reality Labs. Even though I believe that he has earned the right to spend the money, the reality is over the past 2 years, and these are Meta's numbers, the way they break it out, over the past 2 years, Meta's generated $197 billion in operating income from its family of apps. Reality Labs has lost $40 billion. They've still generated $158 billion in operating income over 2 years. I mean, this is an incredible company that continues to grow. And when you look at the valuation, and these are Wall Street's numbers, not mine, the forward earnings growth for Meta is 28% over the next 2 years. It is trading at less than 19 times 2027 earnings. When I look at this list, I do not see a market that is expensive. When you have Meta, Alphabet, Microsoft, NVIDIA, and Amazon all trading under 26 times 2027 earnings. That's not an expensive market with the amount of growth. NVIDIA's got 79% growth, Microsoft 38%, Amazon 33%. So this is really interesting setup right here.
So here's a question, Steve. What is Meta typically traded on a forward PE forward PE basis?
Before the recent sell-off, it was trading around 23, 24, that area.
Let's look it up. 1 second.
Macro trends may have it. I know they track Amazon on that level. I've never actually looked at it for Meta, but from all the times I've ran this scenario, it trades in the mid-20s on a forward basis to low 20s.
Let me bring it up. Let's take a look together.
Yep. Let me remove mine.
So PE, forward valuation. So forward PE, Meta trades at, except for that giant move down.
Yeah, forget the giant dip. Yeah.
On average, I'd say probably around here. So buying the dip on Meta would not be a bad idea. Like right here at the lowest during Liberation Day, it was like 19.4. Right now you're at 20. So it's not like, and especially if you have a 2-year time horizon and their growth rate, and remember, they're still doing share buybacks is there. I mean, this thing can get back to about a 20. I mean, I see this being roughly getting to about 25 to at least 26 on forward basis. So what is the EPS target going to look like for? Let me see. 1 second.
Here, Chris, the EPS target's right here.
Yeah, for 2028.
I only have 27 because that's where you start getting a massive decline on analysts. But
Yeah.
2027, they're supposed to do $33.61 of EPS.
Well, I'm saying on a forward basis. So if you're looking at this,
18.5 times.
yeah. So if you're looking so I'm seeing in 2028, we're looking at roughly $39 in earnings for Meta per share.
Yeah.
$39. So $39, if you just take that, multiply it by, what is it, 23,
You know
let's
what?
say?
I can bring it up on Seeking Alpha actually has all of it. Hold on. They actually do a good job on this.
It would be worth $900 a share. So Meta in 2028, like year end 2027, all in all could be worth probably like $900.
And the reason why I only go to 2027 is because look at the massive drop off on analysts. It goes from 26 to 7.
Yeah,
But,
yeah.
I mean, this is a company that is still expanding. And the thing that annoys the hell out of me is that the algos got a hold of this. And when you actually look at what happened, they missed by $5.66. But their normalized EPS was a beat of 58 cents. Now, the street saw this huge red mark and sold it off. The earnings call didn't even happen. Nobody had the time to even look at a press release because everybody thought the world was burning. Susan Lee, their CFO, went on the earnings call and said this is because of a change in the tax code. It is a one-time hit they have to take, and it will be beneficial to earnings in Q4. It will be beneficial to earnings going forward in subsequent years. So I think this is one of the biggest overreactions I've seen. And I think that this is a price people are going to be shaking their heads at that they didn't add to their position. Now, if you ask me why I'm not adding, I have an extremely low cost basis. I'm adding to other things right now. But if I didn't have what I consider a full position of Meta, I would be adding here over buying other things I'm currently buying. I just think it's a screaming deal right now.
I'm looking at some spreads on this thing to see if there's anything attractive.
If there are, let us know. But yeah, that was my take on Meta. I mean, I've talked about this for a while over the past week or so. It's just it's infuriating to me because of how good of a company it is and where their actual metrics are. It's kind of crazy. And that actually, if we're done with Meta, I do want to talk about AI. If you guys will entertain me on that.
Chris, do you even buy shares of companies anymore, or is it just purely
I do.
spreads these days?
No, I do. But spreads are, for like overreactions, spreads are awesome because what tends to happen is you get this IV move and you can even, if you're smart, you can leg into the position, which I've done successfully quite a few times now. So like if you see a sharp sell-off in Meta right now, and let's say it gets back to trading at a range that it was before after the news is cleared, like right now, I'm expecting a Santa Claus rally, right? So if I'm expecting a Santa Claus rally, right now would be a good time to buy a call position on this thing, let it run up, and then sell against it with a much higher priced, what is it called? With a much higher target, and get most of my premium out. And now I just have to let the company do its thing. Like right now, if you had bought Meta in December last year, it's the same exact price as it was last year in December.
And
even after
you have all the additional growth right now.
Right. And all the additional share buybacks that happened over the last year, everything that it got added to it. So you're basically buying this company 1 year back.
Yeah.
So
just so I understand it correctly, from a spreads perspective, instead of buying both legs at the same time, you'll buy the long call option, like the leap, to take advantage of the immediate drop. So like Duolingo was one that's interesting because I think it dropped for stupid reasons, quite frankly. 26, 27%, you would buy, let's say if you were bullish, or we can take Meta, whatever, you would buy a call option right now for 2027. And then in a
Probably
couple
2028, not necessarily 2027, but
2028,
2028.
whatever. And then
Yeah.
let's say it does rebound a little bit after it jumps up 10%, 15%, whatever. At that point, you sell the call option and then you just get a better spread, or maybe just get your premium out altogether.
Right. You get, exactly. Depending on what the recovery looks like, you get a much better position. And so you're taking a lot of risk off of the table, but collecting a lot of the upside. And so even if Meta for the next year trades flat, that call that you sold will end up getting devalued over time because of theta decay. Now, here's the thing. If you buy something that's in the money, right, and it goes in the money, the chances of it going down are a lot less because there's still time value that's going to decay, but that intrinsic value is going to remain, right? So let's say right now you buy a $600 call on Meta for 2 years out, right? You're basically going to pay a premium, but then let's say Meta goes up by $100, and then you sell like a $800 call in for 2028, and that costs, let's say, $80. Now you're getting $80 back. You only paid $100 here, so now all of a sudden, your position is only $20, and if your entry was at $60, your break even is $6.20. I mean, 620.
Right.
So whenever you see these massive sell-offs, it's not a bad idea to look at the options market, pick something up short term, let the thing recover, and then sell and that's what you do. You it's not a. Let me show you guys.
Well,
what I mean.
It's also interesting because I don't trade spreads normally, but I'm thinking of it from the perspective, like in my use case where I buy leaps, and there's like leaps that I bought $80 Nebius leaps, and those are like 160% or whatever, because Nebius is at 115. And what I'm hearing from you is well, I can just sell the call against that to create a spread as a way to de-risk.
You're definitely limiting your upside. But at the same time, if the premium is really, really juicy, does it really matter? Here's an example. Let's just do Meta real quick, right? So let me just make sure this is Meta. Okay. So this is Meta right here for January 2028, right? So a $600 call that leap costs almost $172. I probably would not buy the 600. I'd probably buy something a little bit out of the money. So probably like this $132 leap, right? And you can see here the drop off that happened in this position. So it was trading before the drop. Let me see. There you go. Around $206. It's dropped from $206 to $136. Okay. So this is where you would want to load up on Meta. And then you would go and probably sell the $800 call against it in the future. But the question is, what are you going to get for it? The $800 call before the sharp drop was around $110. Okay. So not even, actually, sorry, that's not it. That's not right. It was $154. Okay. So let's say Meta starts to recover again. You would sell this at $154. But what you did is you paid what did I say over here with 600 bucks? No, 700, 132.
132.
So you're basically getting most of your money back, and now you've got a spread, and you're basically letting your profit do the job for you. And here's the thing. If Meta goes to 710, you already made money. Now, let's say Meta hangs out at $750 for the next 2 years, whatever, you get $50, profit on top of what you already took out. So that's the thing. Whenever these sharp sell-offs happen with companies that have good intrinsic value, you can leverage this way. Now, the thing is, this is assuming that there is going to be a quick recovery, that the sell-off was unjust. If you think that the sell-off is justified and that there's an existential threat to this company, then no matter how many leaps you buy, you're not going to make money. It's only if the market overreacted. Now, the way that you can tell if the market overreacted is usually by going to the chart right here. And let's say you're doing a 1-year chart on this, you can see it's an oversold territory. I don't know if it's overbought, it would probably been here in the 70s. So this is where I would just say from a directional standpoint, let's say on a 5-year chart, it usually trades at these lows and then makes its way back up here again. So look at that move down. So I would say right now is not a bad time to buy some Meta leaps. And then when the RSI starts to get closer to the 70, sell the call against it. Especially if you think this is going to be like $900 by the end of 27. So, and Meta is a very liquid company. That's the other benefit. You don't want to typically do something like this for a non-liquid company because the bid ask spread would kill you. So let's look at the options. Like you see Meta, how much options volume this actually has, and the bid and ask spread is only like $1, $2. There are other companies that are super low liquid. You don't want to do a strategy like this.
Right.
So yeah, Meta's a good one to look
Chris,
at.
do you have the desktop app for Hood? I think that their
They don't have a
option
desktop
maker
app.
is just so much better.
Legend.
What do you mean? Like
You
Legend?
mean Robinhood Legend, yeah.
No, I think I like this one, believe it or not, because it actually does let you do like straight up vertical spreads if you want to see. Like, look, this is the vertical spread if I want to see for Meta, right? Sorry, I clicked on the wrong thing. Meta.
I'm just so used to looking on the Hood app now since you showed me the way it looks.
Yeah. Well, the thing is, this one has the same thing. So why does it keep showing this? 25. Let's do 100. Okay. So you can put in the width that you want. So let's say I want a width of 100 on a vertical spread. So this one will show me how much open interest is in the different spreads that are out there. So like right now, the 650, 750, the width is, there's about 600 and about almost 700 open interest in contracts. And the width between the two is $50. And the spread between the two is $33.45 and $39.99, which means the midpoint is going to be about $36, right? So if you think about a width of $100 and you buy $36 spread, that means you're looking at roughly a little less than a 3x move on this, just for it to get to 750 by the expiration date. Now, if you want to see this, how it actually happens in what is it called? You could just put it here to buy, and you can actually see the graph here, what your P&L is going to look like. So the most you're going to lose is 39,000. The most you're going to gain is 60,000 profit. So that's double the risk. Now, of course, you can take more risk if you really wanted to, and do, let's say, like a 750. Like if you really think that this is going to get to 800, and you want to do like 700 to 800. Sorry, let's do 700 to 800 right here, right? The cost is $30. I would rather buy something closer to the money than this. But once again, the gain here would be more. Not a substantially more, but it would be more. So, yeah. Sorry if I'm not being super clear, but did you guys get it? What I'm trying to say? Like,
I know exactly what you're trying to say. I just think the app on Hood, the graphic on it makes it easier for people in the audience to keep track of what you're saying.
Well, you show it because then it's going to show all my.
I don't have Hood on my computer. I just have the app on my phone.
Just go to Robinhood. Just put in Legend. There's no app to download.
No, we don't use. I don't use Legend. I use whatever the app is.
You can do that. It'll show you right there.
Hold on.
I'd love to help, but they don't operate in my region, unfortunately.
Get a VPN.
You need a fake social security number, Tevis?
Yeah, seriously. Are those easy to get? I hear they're easy to get.
Chris, do I have to log in?
Yeah, you have to log in.
I'm not logging in. That's not.
See, that's what I'm trying to tell you.
Okay.
Yeah.
All right.
$50 million portfolio is just going to show up.
No, definitely not. Be laying on a beach somewhere.
No, you wouldn't. You'd still be in New York City. Are you kidding me?
I'd be laying on a beach somewhere. Let's see. You guys want to talk AI or BMNR? Where do you want to go?
I think BMNR would be good.
Okay.
You still have your spreads open, Chris?
Say again?
You still have your spreads on BMNR?
No, I sold covered calls. I sold my spreads a while ago, and I've been basically selling covered calls against my position because the IV was so high on the call side. I've just been selling covered calls on it. You know.
So Tevis, I know you did a big video on it. So do you want to kick it off with BMNR, and then I'll go into some digital asset market clarity?
Yeah, sure. Unfortunately, I closed all my tabs of the video that I did earlier today. But
That's your problem.
I think everything is going in the right direction from an ecosystem and adoption perspective. Like you saw JP Morgan take a big stake. You saw Vanguard. Funny enough, JP Morgan reduced their stake in SBET by 70% and then increased their stake in BMNR by like 1.9 million shares.
I heard that was debunked.
Well, it was confirmed by BMNR and Tom Lee.
Well, I thought they said that there was just JP Morgan clients who had custody. That's what it was reported. Like they're on custody on their behalf.
I would believe that for Vanguard. I'm not sure about, and you might be right, but then why would BMNR and Tom Lee both comment on it?
That's a good point. Let me see. Everyone seems to be jumping at it, but
so Kathy Wood's been buying a ton of. Actually, did you guys see the interview with Kathy Wood? Mm-hmm. She was basically like the payments use case for Bitcoin is essentially null now that the Ethereum ecosystem is going to take over for that. And just a second, and she essentially reduced her price target for Bitcoin and then started buying BMNR the same day. Go ahead.
I have 2 words. No shit.
Yeah, no.
Like, I mean, in all seriousness, Bitcoin is not a freaking payment system. Its settlement time is for shit.
Mm-hmm. Yeah.
Did you happen to see this clip on CNBC, Tavis and Chris?
And then I'll also play a clip right after. Oh, the stablecoins one? Yeah, go ahead.
I haven't seen it yet. So did you guys see this?
Democrats often offer.
I gotta put the sound on. I gotta bring it back up. Hold on. Oh, I did the same thing Chris did. I swore I was getting better at this shit.
It's hard. You end up closing the.
You always gotta click that freaking button to get it back. Oh, so all right.
Economics correspondent joining us with that. What do we know here, Steve?
Interesting comments from Stephen Myron, the new Fed governor, who is on a leave of absence from the administration, about stablecoins and the potential effect on monetary policy. He calls stablecoins could be the multi-trillion-dollar elephant in the room for central banks. Stablecoins, he says, could reach $1 to $3 trillion by the end of the decade, the uptake of it, that is. And stablecoins will reduce barriers to dollar use around the world, including, he says, giving access to dollars to the, quote, financially repressed around the world. Now, here's where we get to this issue. There's a range of different factors, he says, are already putting downward pressure on the neutral rate. You know that he's dissented several times for more rate cuts. But he says widespread use of stablecoins could reduce interest rates by as much as 40 basis points. He compares it to the global savings glut made famous by former Fed Chairman Ben Bernanke. The growth of stablecoins could increase the supply of loanable funds into the economy, putting that downward pressure on interest rate. The neutral rate, he says, if it's lower, the policy rate should be lower. Of course, Scott, the context is necessary. He's been arguing for this, for lower rates for a long time. This is another reason, but it's an interesting, compelling reason about the broader impact of stablecoins on the uptake of dollars around the world. Scott?
I love hearing that.
Yeah, man. Whenever you guys hear the word stablecoin, just think dollar proxy, because that's essentially what stablecoins are. The largest stablecoins in the world right now are all priced in dollars. So
Well, yeah,
even
they
if
have to be
like
backed by treasuries.
right, so the U.S. government would love nothing but this, so that this way they can issue more treasuries, and all those one-year treasuries can get bought up by stablecoin issuers. So if you look at how many treasuries Circle has, it's pretty insane. I think they have like almost how many treasuries do they have? I have to look it up. But
I
the
don't
volume
follow them.
but the volume is insane. And so even like governments around the world are supporting stablecoin issuances now. You know. So now here's the thing: the benefit for something like BMNR is that as stablecoin adoption grows, you're going to see transaction volumes grow with Ethereum. So ETH total supply. So let me pull this up 1 second, guys. It's a coin market cap right here. So one of the things that Ethereum did like in 2021/2022 is they introduced a forking feature where Ethereum was going to go from proof of work to proof of staking. And so there's two parts to it. There's Ethereum issuances for transactions being confirmed. And then at the same time, there's a portion of it that gets burned. So the supply of Ethereum has basically leveled off to about 120 million 100 million ETH in circulating supply, right? So if stablecoin adoption grows, that burning and issuing feature become a lot more common. And so you'll see the stablecoin actually trend, in a negative direction, in a downward move. So it could be a deflationary asset. So whenever you have a deflationary asset versus an inflationary asset like the US dollar, which is just money printing, you see the value of that underlying asset go up in value. So right now there's 120 million Ethereum out there. If let's say Ethereum goes down to 110, all of a sudden now Ethereum got devalued by 10%. But at the same time, the dollar, there's way more dollar issuances. So now there's actually a gain on it. So that's the best way I could explain it on here. So would you like to add any color to that, Stephen, on if I explained it wrong? Hungry? The milkman is hungry. What is he?
Let me play a clip for you guys. This was from a recent interview that Tom Lee did. I think it was like 2 days ago. And this clip's been circulating over the past couple of days. It just talks about the total addressable market, let's say, of Ethereum. And I mean, obviously he's talking his book around BMNR as well. But I don't know if you guys had a chance to take a look at this clip or not. Steve, am I okay to play this?
What's it on?
What?
Yeah, it should be fine.
I
You're
shared
commenting on it, so it should be fine.
Yeah. All right.
Ethereum's network value today is, maybe 400 billion or so, but global GDP is 90 trillion. Okay, the total size of global financial markets is, 200 trillion, maybe more.
Yeah.
There might even be 300 trillion. How much of that ends up on blockchains? The idea, according to Larry Fink, is to move 100% of this onto the blockchain. So we're talking trillions of dollars of assets moving onto layer 1 blockchains. That creates a lot of network value for the underlying chain that's essentially the base layer. So yeah, it's...
Yeah, you mentioned Larry Fink multiple times, also Secretary Besson. They're all pro this direction.
Yeah. So we could see, exponential upside. Ethereum's network...
So, I mean, very simply put, we can argue around the percentage that goes on chain. Maybe it's not 100%, maybe it's 20% or 15%, but it's still multiples of where it is right now, because in relation to wider total addressable market, let's say, crypto as a whole, let alone Ethereum, but crypto as a whole is peanuts.
Yeah. Every bank I'm looking at is working on stable coin, right? Because it lowers their cost significantly to be on it versus your traditional interchange fees and everything else. So like I said, I think stablecoins is the way to go. And so the underlying asset that's most prevalent for stablecoin adoption is Ethereum. And so the network value of Ethereum grows over time, in which case you as a BMNR shareholder get the value of that. So
did you guys see the news about President Trump saying that he's going to sign the new bill or the new act? It was all over X this afternoon.
About what?
The
The 50-year-old mortgages? Is that what you're
no,
talking about?
no, the crypto legislation, new market structure bill. I think that's just what they're calling the Clarity Act now.
yeah.
So that's huge because it's going to provide legal and final certainty for it. And for Ethereum, the Clarity Act will resolve the ambiguity, and based on the definition of the mature network, it would probably classify it as a digital commodity, which is huge because now you will have true framework around this. And it'll assign the CFTC as the official regulator rather than the SEC, from what I've read. And when I look at that, makes it look like that the door for institutional adoption will be unlocked and it'll legitimize secondary market trading. So I'm really bullish on this and think that this opens up the door for a lot of things, including tokenization. So it just goes back to what we've been saying around stablecoins and tokenization. And I really want to see what BMNR does with staking. I'm really annoyed that we did not have an earnings call and we did not learn anything about staking, network benefits, anything like that.
Elon just posted a monkey in a coconut DJing something. And he's like, create your own videos on Grok. I was just wondering what the hell.
Freaking Elon.
You want to show people? It's actually pretty funny.
Freaking Elon. So the real question is, at what point do we get a reversal? And are we getting a crypto winter? I mean, I'm happy adding to my Ethereum and BMNR at these levels, but I wouldn't mind seeing it a little higher.
What, Ethereum? I mean, BMNR?
When it is higher, you're gonna say, "I wish I bought more when it was at $40."
No, because I'm not able to write calls right now.
You're not
Because you
able
already sold calls?
No, it's too low. It's not worth it.
to sell calls. You mean?
Correct.
Yeah, so then sell some puts.
Then buy calls, bro.
No, sell some calls. I mean, sell some puts.
Yeah, selling puts isn't a bad idea at this point.
It's at what, $39, $40? A 60-day output. The last time I checked is almost $9 right now. It's a 25% return for something that you want to own anyway. The IV is still relatively high. If things are oversold, you sell puts. If things are overbought, you sell calls. That's the TJ wheel deal strategy. Or at least I would hope that is.
Yeah, let's look at what the puts are going for.
They're a great price right now. I was considering using some too. Here.
Yeah, you have January 2026 puts for at the money for like $9, $8.50. What? That's
End of the, I mean, Jesus.
That's crazy.
You're getting basically 9.5% selling the 39 for the end of the month. That's insane.
Yeah, the IV's insane right now, brother.
So for every 3,900 you lock up, you get 9% on your money, 9.5% on your money over a 22-day period.
Yeah.
Bro, you get over 15% on your money just writing a cash secured put at the money for the end of the year.
It's pretty wild.
That's so wild. Oh, man. Makes me want to write more, honestly.
Are you down on your puts right now, Stevis?
Yeah, for sure. I am. But I kind of
It's an underlying asset. Yeah, it's something that you want to own anyway. So
I mean, that's pretty wild that you can generate 550 for December 15th.
This is where the best strategy, believe it or not, from an option standpoint, is to do a covered strangle. You would make a good amount of money in a covered strangle. I'll show you guys. Look, take a look at this. Show my screen real quick.
Yep.
So a covered strangle right here, which is a collar, right? And let's look at BM&R because the vol is so high. You can do, let's say, January, right? So January 26th. No, that's 2026. Yeah, January 26th. You could do and let's do a width of $10. So right here, you could do 40.50. Okay. So essentially what you would do is buy the stock outright. Actually, wait a second. No, this is not it. So where's the covered strangle? Okay, let me actually go to the thing. 1 second. To go to options later. Okay, so let's say you buy 100 shares. It costs you $4,000. You would write a call for January 2026. Let's say a $50 call. So you collect $5.35 in premium. And then at the same time, you would write a put at the same time for the same for $40. And what happens now is that you get this coverage. So let's do 20.
It's just all green. There's no
70.
red at all.
I mean, I'm about to put some red on there.
Yeah.
Update range. So, okay. So as long as BM&R goes up right here, you make a 33% return if it goes to $50. Okay. If it stays flat at $40, you'll make 19%. If it goes down, you're not going to start losing money until 36, let's see, 34, almost $32. Okay, that's when you start to lose money on the position.
Is that
but
because,
until then,
is that because the premium from your call that you sold covers the loss on your downside?
Well, it covers it covers the loss on the share price going down, right?
Yeah.
Remember, you also have that put that you sold at $40. Now, if you want to secure this a little more, but you want to give up some upside, instead of selling the $40 put, you could sell the $30 put. But like I said, you're giving up more return. So now your total upside is 29%, and that happens at $50. But your downside moved down about a couple of dollars to, let's say, $30. So instead of $32 break even, your break even is like $31. But once again, you're giving up some upside. Now, of course, if you think that BM&R is going to go higher, you can, of course, do something like $60. So your total upside will go higher, but then your break evens will actually get worse. So your break even would be like $34 now.
So
but your upside would be here.
You're allowing $10 more of upside room from a capital gains perspective, but you're collecting fewer premiums, so you have less downside less downside buffer.
Right. The other challenge is you're also giving up, like, let's say you think that this is going to stay flat, like it stays at $40, right? What's going to end up happening here is that both of your positions are going to get closed out of the money, and you're basically going to only lose the price of the share price up and down, appreciation, depreciation, whatever. So if the stock is at $40, you're basically keeping your money, you're just collecting all the premium. So you collected $6 in premium.
But you don't own any of the underlying.
You do. That's what you do. You buy the 100 shares first, you sell a call against them, and then you use the margin ability that you have to sell the, what is that thing called? To sell the put. So you're collecting both premiums.
Gotcha. I thought you were selling both without owning the shares.
No. You have to have the shares. That's why it's called a covered strangle. The challenge is things can go as high as, like, let's say BM&R goes to $200. That means that the position, you would get totally wrecked on it, right? So in order to cover against a possible breakout, you want to make sure that you have the underlying shares that are going to keep you from blowing yourself up. Not to mention, you also don't want to what is that? So you never sell an uncovered call on a position like this, because God forbid Ethereum goes to $7,500 and you have a $50 call that you sold. All of a sudden now this thing is $100. Dude, that $5 in premium is going to cost you $50 to buy it back, just to do that. So it's not worth it, So you have to make sure you have the underlying shares in order to do it. Don't call me Chris the Wheel Deal. I take an insult to that. I hate options, bro. I hate
There's actually one question here that I think is interesting for you to answer. Like, in these strategies, like, what are the scenarios that you would hold this out and let the time decay do its work versus you would essentially close the position? So I imagine if it goes to 50, you would close it early. But if it oscillates sort of between 50 and 40,
I would just roll it. I just roll it. Roll the $50 as the date comes along. Roll it to the next 60-day contract.
Right, and you just
maybe the same strike
when you're put.
Yeah, exactly. The question that you have to ask yourself is, what should the fair price on Ethereum be going into January? Right? For me, I think it should be closer to $50 to $60. I think Ethereum is going to have a nice Santa Claus rally. I think speculation is going to be back on the menu. If you look at the fear and greed index, it's at like 15 again. They've got the tailwind of rate cuts coming, tailwinds of government shutdown finally ending. So, right now there's a lot of fear in the market. So why not? The reason why I think BM&R is better, I think some people are talking about, than Ethereum and all these other things, is because BM&R has gone through a period of volatility. So if you want to sell options, the volatility is you do it on stocks that are very volatile. Those are the ones you're going to make good premium on. If you do premium on companies that are flat, like look at Verizon. Verizon's not going to move. It's a low beta stock, so it's not going to move up and down. So typically you're not going to get a lot of premium off of that. BM&R, bro, this thing changes hands 7-8% a day sometimes. So yeah.
Interesting.
Then the question is, where do we see it going? End of year or sometime next year?
I mean,
don't know.
Even higher from the sounds of it.
MasterCard just announced, I don't know if this is fake, it's true that they announced Ethereum payments through MetaMask.
It's old news, though. It's not recent. Like, it's a couple weeks old, I think. Yeah.
Oh, no. I'd like to see 60 by end of year. And that's probably low for a lot of people. That's just what I'd like to say.
I think it's between 50 and 60, to be honest with you. Because the thing is, they're still in accumulation mode. So anytime that MNAV jumps to 1.3, 1.4, Tom Lee is going to be issuing shares and buying Ethereum, right? Right now, the MNAV is like 1.2. So there's not a lot of share issuances, which means that the amount of people that are going to be buying while Ethereum goes higher is going to ride the stock higher. So if that MNAV expands back to 1.4, the question is, what is the price going to be? And that's how you can kind of work your way. So like, what the question that we should be asking ourselves instead of looking at BM&R is, what do you think Ethereum is going to be by the end of this year?
4,500 or so.
Really? That's low
so
for a lot of people.
So then BM&R is going to be around 45, 50.
Yeah. Well, I could make a case for it to be even higher because the Ethereum per share is going to be much higher by that time as well. So you're seeing that, like, when like this drop should have been more drastic for BM&R given where Ethereum fell, but it wasn't. Like, it sort of stopped at $40, when it really should have broken into the mid 30s. And I think that's attributed to Ethereum per share being higher. And that's only going to continue into the end of the year. And so you're going to form this floor, like the MNAV relationship that you're talking about, right? So that's going to protect you to the downside to some degree.
I think Phil in the chat's got it correct. Positive BMNR catalyst, staking and getting nearly 5%. I don't know if necessarily you'll get 5% staking. Tom Lee has kind of said between 3 and 5. So I think eventually BMNR is going to announce that they're going to start staking, in which case the MNAV is at least going to be 1.3 to 1.4. Because now you have an asset that basically is generating you cash flow, and you're not really paying anything for it. That's pure cash that you're generating. So why wouldn't you want to pay a premium to book value, right? I'm not saying pay a crazy like buy 2x the worth, but I'm saying 1.3 is not that bad. So if you were to ask me, Chris, what's your end of target? I'd say between 5,000 and 5,500, right? And then the MNAV being between 1.3 and 1.4. And then you just have to figure out how many shares outstanding that these guys are going to have, which, by the way, they don't publish. So you just have to do rough estimates, in which case the target that I get is between 50 and 60.
I like it. The
Yeah,
question for me is, am I getting out of SBET and the Ether machine?
Why are you even in them?
Because I didn't know which one was going to do better staking.
I mean, you just pick the biggest name in the space, man. Like, that's what Wall Street's going to do. You think Wall Street's going to mess around with SBET and these small, like ETHZilla and Ether Machine and all these? Like, no, they're just going to go BMNR and call it a day.
You think BMNR is going to acquire them or go to 10% of ETH instead of 5%?
I mean,
think.
Yeah. Sorry, go ahead, Thomas.
I mean, I think acquiring is more feasible in my mind than going to 10%. I think after 5%, they could announce, like they would go to 6 or 7, but I don't think they want to go much, much higher. Like, so I think staking is really the main thing on the horizon for people. But even at 5%, they're many multiples above the next biggest player. Right? Like, what is the relationship with SBET right now? It's just a massive discrepancy in terms of the ownership or the allocation, like the holdings. So I think like it would make sense for them to acquire a small, like I've been on this bandwagon for them to acquire ETHZilla because ETHZilla was trading at a discount for quite a while, and you could buy them fairly cheap and just proxy acquire all their Ethereum.
It's not a bad idea. It's not a
bad idea at all.
The only challenge is I'm not sure that the boards on the other companies would approve it. Not to mention, I would say the challenge that you run into is, will Tom Lee and these guys want a ETH competitor to not be in the market anymore? Because remember, you're basically draining someone else who has the intent of accumulating, right? So if you have an underlying asset, you want as many people accumulating as possible so that the underlying asset's value goes up. So, I mean, that's just my take on it.
Yeah, but so I get that, but they also get cheaper Ethereum. Because if something is trading at a negative, like under 1 MNAV, they get a discount to the Ethereum that they're holding, right?
That is true.
And so it's like, well, Tom Lee can just lower his cost basis on Ethereum by acquiring one of these guys that are trading at like 0.8 MNAV.
Yeah. Yeah. Are you like 100% all in BMNR? No. I wouldn't be 100% BMNR. Shoot, that's not.
I wouldn't be 100% in anything. Jeez.
Yeah. That's just bad risk management. 50.97 end of year. Sure, I'll go for it.
I mean,
what was the highest? What was the highest it got to last month? 4,700, 4,800?
4,800 or so.
4,800. And it was what, $63 the max on BMNR at the time?
Yeah, I think 60.
That I don't know.
Yeah,
Yeah.
60, 64, 65, I think was the max.
Yeah. That's so funny. Lunar Excursion's like, I was full port Palantir. That turned out great.
Well, I think they can, like, I think Tom Lee has the ability to pump Ethereum. I just think it goes against what they are trying to achieve right now, right? Like, they're trying to keep the price as depressed as possible so that they can accumulate more. And they're acquiring every week. Like, if they were done buying, it's very easy for them to start, like, pumping harder. I just don't think they want that. It doesn't serve them right now.
Did you guys see Eric Trump on Nelk Boys?
No, what did he say?
Talked a lot about crypto and that they own or they're invested in a Bitcoin mining company. Talked about how Barron got all in on crypto when they got debanked. It was actually pretty interesting. He's very bullish Ethereum and Bitcoin.
It's not bad to have the president's son be bullish on the same asset that you're bullish
Right.
on. It's never a bad thing. Yeah. Yeah, I think it'll do well. Like I said, I just see too many people talking about stable coins for Ethereum not to make it for Ethereum not to do well. The other thing is, what do you guys think of the new update that's coming to Ethereum?
Yeah, it's coming December 3rd. I mean, the transactions are going to skyrocket. Like the network is going to become cheaper. The speed is going to be increasing. And overall, I think it's going to be helping quite a bit with adoption because, like, when you think of Wall Street and their motivations, like, they just want the stability and they want the biggest sort of player in the space that has that utility aspect. And Ethereum meets that need more than Solana and other chains. And now it's like, well, you're not even losing that much with Ethereum as a result of these upgrades, making the ecosystem as a whole just a smoother experience.
Yeah. By the way, the other reason why Ethereum is down is because of that hack that recently happened about, I think it was like 2 weeks ago. Was it
Balancer on Monday?
Yeah, yeah. So people are kind of got nervous a little bit by that, saying, hey, wait a second, like, how are we supposed to trust X, Y, and Z? And it was like the balancer thing was just, that was an old protocol that they were running. So this is one of the things. It's almost like your bank getting hacked. Does that mean that you should get out of the US dollar? Like, no, that's dumb. No. Oh my God, Wells Fargo got hacked. Let's all sell our dollars and buy rupees. Like, no.
Ethereum's at 33.73 right now. God, this makes me want to buy more.
What is?
Ethereum's at 33.73.
It's insane.
So buy more.
Too many things to buy, Chris. Too little monies.
What are you guys buying? You guys looking into anything?
I mean, I bought more Ethereum, BMNR. I actually bought more of a pipeline this week.
Which one? ET?
OKE.
Okay, ONIAC. Okay.
Because they have the biggest takeaway from the Bakken and Wilson Basin in North Dakota. And they run right through the Power River Basin.
I bought Fiserv. I'm dumpster diving. I'm like, let's take a look at this. It's trading way too cheap. I'm dumpster diving. I looked into the new CEO. The new CEO is very competent, comes from PNC. The entire board has been replaced by a bunch of BlackRock folk. So Larry Fink's hands are all over this thing now. So I'll take Fiserv. It's oversold.
You know what? And it's a good that you're here, Chris, because I want to ask you, so one of the things that I'm not buying it actively, but I did buy a little bit over the past couple of weeks was Next. But then I saw the VG drop, which is kind of insane. It's like at $8. And now I'm thinking to myself, well, heck, if Next is at $6 and VG's at $8, I might as well just buy VG than Next.
I mean, VG is generating a lot of cash flows, but the challenge is they have a lot of debt also. So you just have to understand that VG is going to do really well in a low debt environment.
Right.
Next Decade is not financing a lot of terminals on debt. They sold a lot of equity position. But remember, Next Decade is only trading at, I think, like a 1.4, 1.5 billion market cap, whereas Venture Global is trading at a
Yeah.
$19 billion. Now, the upside for Venture Global is that once they resolve all these litigation issues with BP and some of the other majors that they had contracts with, I think the wall of worry on the total litigation cost will go away. So this is very similar to Google. Remember, Google was trading $100 less than where it is today. And what was the main difference? The only reason why is because the litigation issue, no one knew what the impact was. And I feel like the impact on Google was a lot worse than what Venture Global is going to have to cough up in order to deal with these litigation issues. So, I think a couple of $1 billion, if Venture Global has to pay, they'll pay and keep it moving. I mean, it's the cost of doing business. So these things are going to come around. Their cash flows are healthy. The rate at which they're building these terminals is really fast. They're probably going to eventually start paying down their debt and buy back shares. I mean, right now they are taking advantage of the Trump administration being so lax with the building of LNG terminals that they don't want to risk like waiting, right? So other companies are kind of like, should we build it? Should we not? Venture Global is like, let's just build it. We'll take the risk right now, because if we do get an administration or a Congress that gets super liberal, then they may shut down all future building permits. Like that's what happened to Next Decade last year, where they got put under like an environmental review and all this other stuff. And the Trump administration comes in, they have a brand new EPA person, and they just said, let's keep the ball rolling because the economic prosperity of the country matters, instead of trying to deal with these frivolous lawsuits. So a lot of environmental groups, what they tend to do is they know that there's a lot of money going towards building facilities like this, but the cost of basically litigation is not necessarily the physical cost that people are too concerned about. It's actually the time delay. So what a lot of these environmental groups they do is they tie you to this what is this called? They tie you down by taking you to court for the next 3 years and say, oh, look, you're doing this and you're doing that and this. And so eventually a lot of projects, they get canceled because the financiers, they just take their money out and they're just like, sorry, like you couldn't even get the approval. So right now the Trump administration is like approve. Yeah. And so Venture Global is like build.
Well, my thought process was fairly simplistic. I mean, the benefit of VG is that they're operational, and you're not going to have as high upside potential because you're investing on the ground floor essentially for Next, because they're not operational yet. But at $7 or $8 a share, like there's more juice left to squeeze than buying it at 17 or $18 a share, because it's fallen so much. And so I'm like, cool, it's a safer play, because aside from the litigation risk, like they are operational and you're now getting a discount to buy them, versus for Next, that you have like 3 years baked in holding period there until they, start
producing.
Exactly.
Like I said, it's all about debt markets too, because that's the other thing. Like right now, Next Decade doesn't necessarily have a lot of debt on the balance sheet versus Venture Global, who does have a good chunk of debt. And at the same time, if you have debt, the financing costs are going to drag on your EPS until you start getting around that debt and getting that debt paid off. So Venture Global's debt is not growing that much, mainly because they have been adding a lot of their own cash flows to these projects, but their debt is expanding. Now the question is, at what point will they stop growth expansion and work on debt repayments and share buybacks? Because that's when a lot of value is going to come to the shareholders. So if you're the key to Venture Global, and this is something that maybe me and Matt will cover, it's all about cash flows. So what kind of operating cash flows is this company generating? Right now, it's about $6 to $7 billion of ops cash a year, but most of that ops cash is going right back into capex and interest payments, but capex mostly.
Chris, I want to get
Yeah.
your opinion on this.
The other thing that's happening also, by the way, so I know someone's asking about the debt, is that the interest on the projects that are not fully built out, they're rolling that into the cost of the project. So imagine right now you're building a house and you borrow $100,000 and it costs a year to build and you're getting charged 10%. That means that 100,000 you paid a $10,000 interest on it. Instead of saying you paid $10,000 interest, what you do is you add that $10,000 to the total cost of the project that you're building. So now you have a $110,000 house, quote unquote, that now when you do your depreciation, you're depreciating, for 110, you're not depreciating for $100,000. So that's called capitalized interest. So right now, a lot of the interest that they're paying is getting capitalized back into the projects that they have right now that are still under construction. And so over the next 30, I think the facility is like 20 years of depreciation. And the reason why depreciation matters is because the more assets that you have to depreciate over time, the more you can depreciate against your net income. And that's less tax that you have to pay. And because you have to pay less taxes, that's more money that you can use to buy back shares. Sorry, guys. Go ahead.
Give me one sec.
The other thing also, the rate that they pay on their debt is not that high. But what's important is that too many people, they just focus on what's the debt. As you go from being a risk capital, like let's say right now you're a double B or a single B issuer, when you issue debt, you're probably issuing at 7, 8, 9% interest. But then as you pay down the debt, just like any other person, your credit rating gets better and better. So your income goes up, your debt goes down, and then you move down the debt ladder. So you'll go from being a single B to a double B to a triple B to an A minus to a double A. And if you do that, you strip out a good amount of interest costs on a forward basis. So, yeah.
So OKE pays a 6% dividend right now.
Okay.
It's got 43 billion market cap. It's generating 5.66 billion in cash.
Mm-hmm.
It's trading at 7.5 times cash from operations. It is trading at 14.5 times free cash flow. Free cash flow is just about 3 billion. Last quarter, EPS beat by 5 cents. They did $1.50 per share, and revenue beat by 91 million.
Show us, man. Show us. Put it on the screen.
I don't have it broken out nice and pretty. I did it very sloppy. I'm going to show you something though. Just give me one sec. So 17% increase in Rocky Mountain region NGL raw feed, 6% increase mid-continent, and 3% natural gas volume increase. When I look at Energy Transfer's map, okay, this region is where I'm really looking at, the Bakken and Williston, and then Powder River here, right? We know that more consolidation is going to happen. That's all these companies have been doing. Kinder Morgan, very, very big. Enterprise Pride Partners has like nothing up there. And then you got Enbridge. I have a sneaky suspicion OKE gets acquired by somebody because their freaking volume coming out of the Williston and Bakken and then running through the Powder River is the most dense. And this becomes an asset that fits on anybody as a bolt-on acquisition. And you look at what they have through the Permian and through the Eagle Ford, and then in Middle America or the mid-continent. And this is like a perfect acquisition for.
Yeah, but talk to Matt about it. The reason why is because break evens up in the Bakken are like $80. As far as I know.
Is it that high up there?
It's pretty high.
Interesting.
So you're not going to see a lot of volume from there, at least for now. So let me see. Break evens, Bakken.
Yeah, OKE is trading at a great valuation right now, so I've been buying more of it.
Okay, so Bakken, it used to, let me just share my screen.
Bless you.
Sorry guys. So Bakken used to be almost, so Permian Midland used to be 100. It came down from all the what is that thing called? Development. And then Bakken came down to, right now it's around 60 for 2023. When was this? I have to look at the new cost for the break evens. But even at 63, that means that Bakken is not really profitable. It's one of the highest cost for oil right now. So you're not going to see a lot of growth in this area unless the price of WTI goes to like 75, 80. Then you'll see more drilling in the Bakken.
Tavis is like, what the hell are you two doing investing in pipelines?
No, I mean, it's interesting. It's just a little bit out of my depth.
Well, it's because I think AI is real. That's why.
Okay. See, now North Dakota near break-even levels. Art Berman. Do you guys follow Art Berman at all?
I do not.
It's probably for energy, he's one of the best guys to follow. He's
Is
on
he?
Twitter. Yeah, he's a little bit kooky at times, but he's pretty good. So, like right now, operating Bakken shale break evens are between $50 and $60 a barrel.
I mean, between
West
50 and
Texas at
60 is good
64.
right now.
It's not a lot of profit. It's not a lot of profit margin. That's a lot of risk for that profit margin just to break even. I mean, like I said, it gets really interesting if oil goes up to like 75, 80. Then it's like, oh yeah, Bakken plays make a lot of sense. The question is, do you guys see oil getting to $75, $80 in Trump's
No.
administration? I don't.
I think it's going to stay between 55 and 65.
Yeah. Yeah, if it stays between 55 and 65, then you're not going to see a lot of volume come out of the Bakken, which, like I said, I don't want to throw that thesis off for you, but just
No, it's fine. I mean, this is I'm just looking at it as I own OKE, Enbridge, Enterprise Products, Kinder Morgan, and ET. So I own pretty much all the big ones.
Yeah.
So it's more a theory of energy infrastructure is undervalued. AI is real. The CapEx expansion is real. We need a lot more energy. So I think you're going to get a re-rating in the sector.
I mean, why not just buy a sector ETF at that point?
I have that too. I got AML Pay.
Of course.
Yeah. Yeah. By the way, Stephen, here, one other thing. Look at this. You can see production in North Dakota. So that's the Bakken. It's flattened out. It's
around
actually lower than
1.2.
2019. Yeah. So you're not seeing any additional volumes come out of there, probably because the break evens doesn't make sense. So
Yeah, as long as the volume is staying steady, that's all that matters for me.
yeah. Yeah.
Let the dividend keep coming at 6%. Let me plow it right back in.
You see that giant move upward here? That was when the Russia war Ukraine thing happened and oil jumped. So you can see that oil output went up. So this is one of those things about investing in energy. It's a little bit weird because if you see numbers come out of energy, like out of the companies, don't buy. Or if oil prices are high, that's not when you want to buy an energy company. You want to buy when energy prices are low, because eventually when they do go higher, that's where you make your money.
Dude, I don't like upstream producers that much.
Yeah.
Chevron looks so interesting here.
Talk to Matt, man.
It looks so interesting.
Talk to Matt. Yeah, right now the Saudis are really, the OPEC is really trying to break U.S. production again.
I don't know that's going to happen.
I think this is my cue to log off for the night because it's 12:30 and we're talking about.
You're going out drinking?
Nah, bro, I'm gonna go to sleep. I can't go from talking about how do we fix Social Security and Medicaid and oil and then just be like, all right, cool, we've done everything. Let me go out drinking now, guys. Like it's not that kind of night, man.
Dude, you're young.
I am. What am I doing hanging out with you guys?
I don't know. I'm asking the same question.
You know what we should do? We should turn this into like milk and cookies. I haven't had cookies in a long time. What's your favorite cookie to go with milk?
So
Steven?
that's a really subjective question. It's very hard. I can make an argument that Oreo is Milk's favorite cookie. At the same time, there's something so satisfying about a chocolate chip cookie. So I'm up in the air, but I would think it's a chocolate chip cookie.
Nah, man. For me, it's Oreo. Oreo all the way. Just something about dipping those Oreos in a cold glass of milk. Mm-mm-mm.
Now, do you get down on the different flavor Oreos?
No, I like just traditional Oreos. Don't care.
All right. I'm
Yeah, I think I'm gonna head out too, man. I think
Thank you for joining, Kevin. Appreciate it.
thanks, guys.
Yeah.
See ya.
Chris, you're gonna head out too?
Yeah, I'm gonna
right.
go to sleep. See you,
Thanks
see you,
for
brother.
joining.
Have a good one.
I'll see you later. All right, everybody. If you're not following Chris and Tevis, please go follow them. I'm going to stay on for a little bit and just run through the chat. So just fire stuff off. I will stay on for a little bit. It's not that late. It's only 12:22. We don't sleep. We don't sleep around here. Chris is on X. I'm going to link his X account. So give me a sec. And then I'll link Tevis's. So you can follow Chris here at Chris Patel 99. Yes, I am still buying QXO. And then Tevis, hold on, fun of investing. And then we got Tevis's YouTube channel here. So please go follow them. They make really good content. All right, let's get into some silliness, I guess. No, Boiler Room is not the best stock movie. No way. It's entertaining. It's not the best. No, I'm with you. I feel good momentum this week. They did not have an earnings call, which I'm not happy about for QXO. So I don't know. I'm waiting for some press releases. I hope for everybody's sake the government gets open this week. It needs to get open on Monday or Tuesday. Like, this is not good. Really hope that it gets open soon. Lock, Stock's a great movie. Oh, by the way, I'm watching Power again because, of course, the new season of Force, they're only doing one episode at a time. So I'm back to watching Power. Such a great show. I may watch an episode before I go to sleep. Matt Money is getting on a plane soon, so I think he's sleeping. He's overseas. He'll be here next week. He said he was originally going to come, but I think when he booked his flight, it didn't coincide with the schedule. I'm not going to go into QXO right now. All I'm going to say, you can read my article on Seeking Alpha about it. I can I'll do a different episode about it. I don't really want to talk about QXO right now. Just looking at Brad Jacobs, I think it's going to be good. Let's see. Meta. I don't know. Hold on. I finally watched Gotti on YouTube. I would give it a solid B. It was great. Acting was great, but definitely felt like an HBO movie. If that makes it, yes, it makes sense. You got to remember, it was not a big budget. It was before The Sopranos came out. If you notice, Puss is in it. Paulie Walnuts is in it. A couple of other juniors in it. There's a bunch of people from Sopranos in it. Definitely a low budget film, but it was an incredible film. Armando Asante did an incredible job. So, yeah, look, to me, it's A tier. If you think it's B tier, I'm not going to second guess that. I'm just happy you enjoyed it. I think it's a great movie. I'm a little annoyed at Take-Two because GTA 6 is postponed. Oh, yeah, that's right, Nick. I apologize. Let's get that out there. So, Chris and Matt have their own channel right now. It's Cash Flow Chronicles. Hold on. So let's link this. So Cash Flow Chronicles is Matt and Chris's show. Please go follow them. Yeah, I'm annoyed at Take-Two. GTA 6 is getting pushed back again. Look, Uncut Gems is a good movie. It's not a great movie. It's a B or C. I would have written that movie differently. I've never been to Sparks. I probably should go there so I can give it a grade. But I love Uncle Jack's. I do not own Take-Two. Listen, I still like XRP. I'm not into horror movies. We doing a Birkin episode on alternative assets tomorrow. Listen, I watched an entire CNBC special on Birkins, and it got me interested. It's crazy with the freaking saddle stitch that they do. Crazy. I'm surprised that like that much money goes into freaking Birkins and how much they sell for. It's nuts. Favorite show right now? I'm really not watching anything on TV except for Power, the new season. I mean, I think that Netflix does a good job with The Recruit and Night Agent. I think Amazon did a really good job with Dark Wolf from Terminal List, and they did a really good job with Jack Ryan. I really liked season 1 and 2 of Reacher. I did not think season 3 was good. Nice, Mr. Hawaii. Industry's a good show. Season 3 coming over the winter, I think. Chef Mike, I agree. I think Reacher was great. I just really didn't think season 3 held up to 1 and 2. 1 and 2 was so good. I am following Bankless. I like that. I think it's a good podcast. I mean, that's really what I spend my time doing. I freaking watch All In, Compound and Friends. Obviously, I tune into Mitch's show and Tanner's shows and Tevis's shows and Cash Flow Chronicles and Matt shows when I can. Alpha Investments, which is a Magic the Gathering and Pokemon stream. I watch Nostalgianomics, Alex's show. So I mean, I watch way more stuff on YouTube. If they incorporate ETH to microtransactions, I will freaking go nuts on GTA. Chef Mike, thank you so much. I really appreciate it. Tulsa King, I watched season 1, thought it was really good. Landman was really good. Watched it. Very good. I'm going to say it. I said it before. I'm going to say it again. Man, Yellowstone is better than freaking Sopranos. I said it. It's crazy that I'm saying it, but you know what? Sopranos does not hold up. Going back and rewatching it, you know what HBO needs to do? HBO needs to make a supercut version, get rid of Carmela, get rid of the kids, get rid of Dr. Malfi, and just do the scenes with the guys. Straight mob. That's it. They would do so well if they did that. I mean, it's so hard going back and watching Tony in the freaking psychiatrist's office. It's so hard. I was so into Yellowstone. I can't even begin to tell you how much into Yellowstone I was. Oh, you gotta keep watching Yellowstone. It gets so good. Favorite war movie? Are you going to consider 13 Hours a war movie? Because I'll tell you, 13 Hours is something that I've watched at least a couple of times this year. It's sick. It's so good. I'm not into Ozark. I think it's overrated. I watched it. Not all of it, but, you know. Yeah, I need some fuel. I wrote 3 articles today. During the day, like from the morning through, probably spent, I don't know how long I spent, but I wrote 3 articles today. Yes, I liked Gran Torino. It was good. I'm not the biggest Clint Eastwood fan, but I'm good. It was good. Columbo? Yes, I've seen Columbo and The Commission, all that stuff. I wish I could listen, I really wish I could time travel. Really do. Where do you find the time to watch so many movies? I mean, think about it. I grew up in an era where there was no internet or internet. I mean, the internet just came out when I was like 15, 16, that area. So, you know. I don't sleep much and I don't dilly-dally. I'm full steam ahead. Thoughts on Link? I don't even know what Link is. Did you watch the movies or read the cliff notes on them? No, every movie I talk about, I've watched. Oh, Chain Link. I don't know much about it. I don't know much about any of the altcoins. No, when you said Link, it just didn't register. Yeah, Chainlink, Avalanche, Cardano. Yeah, I know of them, but I don't follow them. DD on Cologne. You know what? You guys got me on that when I started looking at it. I couldn't find the freaking ticker. You guys got me on that. I'd have to look into Netflix. I don't really. I don't follow them. I've seen Justified. I haven't seen the other ones. I like Justified. Favorite pizza spot in New York is John's. John's on Bleecker. Yeah, the yawns are starting. They're definitely starting. I would definitely consider moving out of New York at some point. I mean, the problem is healthcare. It's just so much healthcare here. It's hard to think about leaving when you're going to get older. Yeah, Solana is good. I agree. Florida's too hot. All right, there is merch coming. I don't know when merch is coming, but we have some designs. So there is merch coming. I got to figure it out. You know, we need to beta test some of these slogans. I mean, one of them is going to be a lone cookie with a slogan, no cookie left behind. I got to figure out a graphic for it. The merch is going to be fire. This is what I'm going to tell everybody. Okay. I am not looking to make any money on merch. There's going to be no upcharge on merch. It is going to be expensive. It's not going to be cheap stuff where you watch a couple of times and it gets destroyed. Like it's going to be good stuff. So we're going to probably do. I really don't want to do cotton. I want to do a tri blend or maybe for t-shirts, something like Under Armour or a good tri blend. I'm not sure yet. If we do polos, it's going to be something like Peter Millar or something. I do want to do hoodies. I got to really look at everything, but it's going to be good quality merch. So like, if I put merch out, I'm not willing to put merch out that people are not going to like. So, yeah, dry fit for the shirts. I'm with you. Like it's just, I would feel horrible if I put merch out and somebody buys it and they think it's crap. It's not happening. So I'm gonna really look into it. I'm gonna do it right. That thing you say, I don't know if that would be appropriate to put on a shirt. I want it fiery pink, and when I bite into it, I want it to explode in my mouth. I don't exactly know if that's freaking something you put on a shirt. Maybe we can if we have a steak on a plate with a fork and a piece of steak and just fiery pink. Maybe we could. At least you went to have a steak. I love that. I would re-sign Bellinger in a heartbeat. Re-sign Bellinger in a heartbeat. Get him. Amit's been eating his steak medium. He sent me a picture of his steak. It was a good cook. Oh, I like duck. I'm with you on that, Charles. I like duck. I gotta look into UPS. I know it's down. Yeah, I've been to Katz's. I think it's overrated. It's good, but I don't like lines. Let's see. We do need to get rid of Volpe. I'm with you. That's a good question. I don't know. I just enjoy doing the videos. I don't know. I have not been to any of those places in Jersey. Steak or cookies for the rest of my life? I mean, that's a really tough question. I'd have to pick steak. I'd have to pick steak. Yeah, I mean, we would do several colors. We do a navy, a white, and a black, probably. Yeah, if I close my eyes, that means I'm thinking hard. I agree. Favorite milk, whole milk. Whole milk. I do get down on chocolate milk. I will tell you that right now. I'm going Islam. I think Islam's going to beat JDM. Just saying. It's going to be a great fight, I think. Uh, my eyes aren't horrible. Yeah, I think Islam's going to do good. I really do. I do not make my own yogurt. That would be crazy. Oh, God. Better show, Succession, or Billions? It's Billions. I'm sorry, but it's Billions. Joe, thank you so much. I appreciate it. Look, JDM's the champ for a reason, right? Like, would anybody be surprised if he wins? I don't think so. I think it's going to be a great freaking fight, and that could easily happen. You know, we're going to run a poll right now because everybody. All right. Start a poll. I don't know if I spelt everything right, and I kind of don't care, to be brutally honest. Let's see what everybody thinks. Let's get everybody involved. I'm saying Billions, and I'll tell you why in a minute. You know what, Nine Rod? Thank you. I'm with you. Bought the Baskin Robbins mint chocolate chip, Ben Jerry's American Dream, Haagen-Dazs vanilla bean and coffee. Listen, you don't go wrong with any of those flavors. All right, so here's why I'm on Billions instead of Succession. And it's going to be a little bit of a longer answer. All right, so, and I love this. Let's get some more TV questions. I think that there's a lot of scenes in Billions that suck, but a lot that are freaking great. And when I think about it and I close my eyes and I re-watch it in my mind, I don't like the way that Tom is portrayed in some instances, even though he ends up coming out on top. I also think that some of the show is so freaking slow that I don't know. Billions to me, there's just so much more to it. And all of those side things, the characters are so much better. Like Dollar Bill, it's just more fun. Bobby is freaking great. The revenge plot with Prince, Chuck, flip-flopping and all of his freaking games. Look, Maggie Schiff is freaking great. Tara from freaking Sons of Anarchy. And then you got Wags. It's just, to me, Billions is where it's at. But look, Succession's a good show. Billions is just better to me. I mean, listen, if you're hanging out in a stock chat at freaking almost 1 a.m. and you haven't seen Succession or freaking Billions, you should watch both. And I'll throw in Industry. Go watch Industry also. I will agree. Bobby leaving for 2 seasons kind of sucked, but it also made the last season so freaking good. All right, so we not a lot of people are voting on this. 63% Billions, but only 38 votes. I guess a lot of people haven't seen both. Billions was on Showtime, but I think it's on Paramount now, and Succession is on HBO. Yeah, Paramount with Showtime extension. Yeah, Industry was really good. Oh, somebody just said Highlander. I'm all in on Highlander. I'm all in. And I got a hot take. Duncan MacLeod, way better than Connor MacLeod. Just saying. I did not like The Boys. Big Short all day over Margin Call, but Margin Call is really good. I did not see the new Predator movie. You know, I'll pass on both on Arrested Development and The Office. I have no interest in watching those. If I have to pick, it's The Office, but I'm not rewatching them. Chef Mike, if you have not seen Billions, go watch Billions. You'll like it. Oh God, that's a great question. Entourage or Ballers? I think Ballers gets a bad rap because of The Rock. I think The Rock was phenomenal in Ballers. I think Ballers was a great show. It was fun. Entourage was a great show, and it was fun. I think I got to give the edge to Entourage, but Ballers is so freaking good. I think it's very underrated. And I could even say Ballers is better, to be brutally frank. It's just, I take that back. Thinking about it, if they're both in front of me, what am I going to watch? I'm probably putting on an Entourage show. But Ballers is very good. I mean, go watch Wall Street for a good stock movie. Yeah, Entourage has like the most cameos of any show ever. I have not watched The Pit. Wall Street or Boiler Room? I mean, I don't know. They're both good in their own respect. I don't know. That's a tough one. That's a toss-up. You can't make a bad decision on that. I did enjoy Mad Men, yes. I'm not into the Superman movies. I couldn't tell you. All right, everyone. Whatever you want to ask now. In 10 minutes, I'm going to call it and try to get some sleep. So at 1 a.m., I'm going to call it. Let's see. Yeah, I didn't really watch the Superman, so I can't help you on that. Did I watch West Wing? One of my coworkers got me into it, and I gotta tell you, the writing's really good. I think it's a good show, but I couldn't get past season 1. I like Cisco a lot. Did Duolingo sell off? I don't understand why everybody likes this company. I mean, everybody likes this company for some reason. I think I don't understand it. I don't get it. I think AI is going to freaking make it obsolete, but that's just me. I'm probably wrong. The Wire is amazing. The Wire is such a good show. Yeah, I didn't watch Grey's Anatomy. I couldn't tell you. Why does 6 Feet Under sound familiar? I mean, you know it's an underrated TV show on HBO? True Blood. True Blood, I went and rewatched it a couple of months ago. So freaking good. Oh my God. True Blood was really good. Suits is good. I like Suits also. Curb Your Enthusiasm is amazing. You know what else was good? White Collar. I thought White Collar was really good. Caffrey. And then Burn Notice. Burn Notice was really good. There's some older TV shows that are so good. Burn Notice is really good. You want a fun show? Burn Notice is fun. When You're a Spy. Let's see. I didn't like Lost. Did not like Lost at all. Boardwalk Empire was okay. Nothing great. One of your exes made fun of you for watching Burn Notice and you didn't watch an episode after that? Come on. How could you not? Come on. Burn Notice is a great show. Coin or Hood? I mean, I'd have to go Hood. '24 is one of the best shows ever made. I like Cisco over Palo Alto. I mean, I hope Amazon does a good job with the James Bond series. I don't know. Yeah, tomorrow night I'll be on. The Rock is a great movie. No, I don't go to musicals and I don't go to Broadway plays. I mean, I gotta go Seinfeld over Married with Children. Gotta go Seinfeld. Daniel Craig, I disagree. I think he is the best Bond by a country mile. I would even consider Pierce Bronson being better than Connery, just for the record. I did not see The Smashing Machine. Was it good? I wanted to go see it in the theater, but I didn't. I will be buying it on Prime once it hits it. There's a lot of good delis. I mean, I'm a fan of Kitchen Cab. Big fan. I mean, cars, not stocks. I gotta go Chevy because of the Corvette. I don't know much about hymns, and I haven't been following Oscar, so I can't say either way. Thank you. I'm celebrating 10K with a glass of milk. Maturing Candidate. Wow, that was a good movie. That was a really good movie. Old movie, good movie. Peaky Blinders was good. I don't discriminate. Give me pie, give me cobbler, I'm good. Either one. I'm with it. I have not seen Fargo. Face Off over Con Air. Oh man, Christian Bale. Christian Bale's the best Batman, followed by Michael Keaton. I have no idea who I would cast as the next James Bond. I have no idea. Man, TSM or NVIDIA, I like them both. Don't make me choose that. All right, I'll check out Fargo. Boondock Saints, good movie. Somebody freaking else wanted me to research ICP years ago. I don't know. Oh, favorite Western's easy, Tombstone. And there's not a Western that comes close. No Western comes close to Tombstone. Big Lebowski's awesome. Love Big Lebowski. Oh man, Gleaming the Cube or Little Monsters? Gleaming the Cube, I think. Christian Slater. I am not a fan of the 50-year mortgage at all. That does not make sense to me. So we're just going to freaking. I'll tell you what, they do a 50-year mortgage, financials are going to go through the roof. Top Gun's incredible. Same with Days of Thunder. I'm not a Green Mile person. Yeah, I'm not a fan of 50-year mortgages. So what are we gonna do? We're gonna lower payments a little bit, but have people pay another 20 years. I mean, the amount of interest that they're actually paying on that's crazy. There's no way it's gonna work. No way. And think about it, you get a 50-year mortgage, you're basically staying in your first house for the rest of your life. I mean, I don't think that makes sense. Yeah, we'll see what happens. I don't think it's a good idea, but Dances with Wolves is not a good movie. All right, everyone. I'm going to call it. I'm getting exhausted. I don't even know if I'm going to be able to watch TV tonight. My eyes are closing. But appreciate everybody being here. I believe that I have a Tesla article potentially coming out tomorrow, and then articles coming out on Monday. Oh, thank you so much, Robert. Truly appreciate it. Yeah, between you and Chef Mike on Monday, I'm buying a couple shares of Grab. Thank you so much. I appreciate it. I'll be on tomorrow night, everybody. Have a great night. Get some sleep, eat some cookies, drink some milk. Talk to you later. Have a great night.